All right. Well, good morning, everybody. It looks like we've got 54 people here. We've got 118 registered for this Ag Outlook and PARP today, which is astounding. It's awesome to have that many people registered. We also have folks that have registered from Florida, Michigan, and Ohio, which is the first time we've ever had this happen for this Ag Outlook. So we were all joking on the call earlier before we let everybody in. We typically have some sort of frozen precipitation on the morning of this event, and usually a little bit delayed or have the attendance reduced because of that. So I'm hoping the commute was good for you all today from the bedroom to maybe the dining room table or the office. So but yeah, I think we've got a good program scheduled today. We've got Howard Halderman from Halderman Real Estate and Farm Management. Continue to space people out in the community to get their vaccine, so that isn't a potential time. So we're going to need to make sure that we mute everybody as we come in. That's perfect. Thank you. So we've got this partnership has been occurring over the last 5 years between Halderman, First Farmers, and Purdue Extension. We've offered this program every year. We've altered the times. We've had it in December. We've also had it in January. And so the January program really kind of sticks with us here. But we've added PARP credits to be able to boost attendance. And I think that has worked out pretty well. So we're going to go ahead and get started this morning. I'm going to go ahead and stop sharing my screen. And I'm going to allow Howard to go ahead and share his screen. He's going to give us our Ag Outlook for the 2021 growing season. So Howard, go ahead and.
So Austin, are you seeing my screen the way we intend?
Yes, sir.
Okay, so you see my first slide, the cover slide there.
Yep.
Perfect. All right, good morning, everyone. And from the Halderman Companies, I do want to welcome you all this morning. As Austin mentioned, really dealing with ice, snow, something on this morning. I don't know how many times we've driven from Wabash down to Tipton to see Tipton High School on some sort of delay or closure as we're holding our seminar. Of course, you guys always show up. So regardless of the weather, we've always had great attendance at this. Do miss seeing everyone, miss the breakfast, miss all those interactions, and I'm sure that we'll be back to that soon. But in lieu of that, we do have the opportunity to have people join us from across the world. Not that we have anybody outside the U.S. today, but certainly from multiple states. So welcome, everyone. Want to introduce the Halderman staff that helped put this together. I think they're on today, but you have Jarrett Wicker out of Noblesville, Sam Clark out of Noblesville, and then John Miner from our Greentown office that are the three area representatives that represent this region for us. And also want to thank Purdue Cooperative Extension as well as First Farmers Bank and Trust. As Austin said, this is a great partnership for us, and we've really enjoyed the opportunity to work with these two organizations on this event every year. So my hope is that the screen share works as intended, and we'll get started. Just a brief introduction about who is Halderman. You know, we've been around 90 years. We're actually in our 91st year this year in 2021. My grandfather started the business here in Wabash 90 years or 91 years ago. We've got an ability to help landowners. That's our specialty, and it's farm landowners. We don't work in commercial property. We don't work in residential or industrial. We specialize in agricultural properties, and we provide farm management, real estate sales, and appraisal services to a whole host of owners. But basically, if you own farmland and you have a question about how to lease it, how to sell it, how to, what might it be worth, those are all questions that we receive and answer on a daily basis. You can see the scope of our business continues to expand and grow. A big growth area for us in 2020, and a lot of businesses, unfortunately, didn't experience growth in 2020. But agriculture, as all of you know, was an essential business, always is an essential business. And one of the things that really grew for us were the farm appraisals. And those numbers were up quite dramatically this year, I think largely due to the refinancing boom that existed due to lower interest rates. And so that's one of the topics that we will cover here shortly. And then you can see the, kind of the corporate staff and how many area representatives and real estate associates we have today. And then the geography that we cover. But I'm not going to cover all the United States. This is a Tipton County event. It's a central Indiana event. So that's what we're going to talk about today, our farmland values in central Indiana. And as this slide says, values are strengthening. And I've had a lot of people ask that are not in the agricultural field. The question they ask me is, what's happening in the agriculture industry? And I can tell them very honestly that through COVID, go back to April, May last year, we saw no dip in farmland values. The market did largely shut down. There wasn't much that traded hands in May, June, July last year. But the values basically remained steady. And then as we got into the fall and we saw pretty good yields combined with better commodity prices all throughout the fall, we've seen values continue to strengthen. Don't miss the interest rate component in that as well. So it's in an industry that I think is looking at better times right now. And we'll talk about a lot of variety of reasons why that is. So one of the things, and I don't know how many of you watch the farm newspapers or go online and look at various listing sites, ours and others, but right now there's not much on the market. It is a tight marketplace. And there were a number of sales that we did back in October, November, which is a traditional time to see farm real estate sell. But honestly, the number of farmland sales has remained below average. And that has been the case since really 2012. If you go back to 2012, you would remember in that August to December time period, we saw a lot of sales, and it was all driven off the fact that there was a concern that with Mr. Obama being reelected, most likely being reelected, and potentially a Democrat Congress, which would be similar times to today, that we would experience higher capital gains tax rates. And that fear in 2012 led a lot of people to move their sales into the early part of the farm sales season. And we had a lot of sales then. Since then, since 2013, we have not seen really any outside drivers like tax law change that would create that kind of dynamic. So I bring that up and I spend a little time on that this morning because we are entering a time period of unknown. You have a new Congress, you have a new president. And so as a result of that, what will be their agenda? And will there be tax law changes that we could foresee coming? Estate tax is something to certainly watch. Income tax and capital gains tax are a couple other things to watch closely. And what might those impacts be on farmland? The Farm Bill is still secure for another couple of years. That's not up for reauthorization anytime soon. So the Farm Bill is probably not going to be anything that moves around, nor crop insurance. But I think the key thing to watch will be that tax law. So we've been experiencing a below normal number of farmland sales. Cropland values have really been in a sideways channel, and we'll look at some slides on that here in a second. But what's going to happen going forward? And I think we're looking at some dynamics right now that would suggest that the market is moving stronger, certainly into the end of last year and as we look to 2021 and what we know on January 7 or so. Recreational timber and rural residential values had been basically trending higher over the last 9 to 12 months. And you'd think, well, with COVID, would that slow things down? Well, any of you that watch the Indianapolis residential market or the residential market across the United States have known that residential values have experienced a real boom time. Houses stay on the market for a very short period of time, if they even hit the market. And that has spilled out into the rural communities. And we've seen a number of folks, because of the technology that we're utilizing this morning, that have said, you know what, I can work from home. And because of that, I'm fine with living in a more rural setting. And in fact, I might look at that as being safer today. And so recreational and rural residential values have trended higher, which was really a change in what that marketplace has experienced over the last few years. Low interest rates help that, as well as the COVID fears. Federal Reserve Bank of Chicago, they'll come out here in the next few weeks with the fourth quarter results. Basically, I think that'll be a kind of a January report. But you can see from October to October, the district, which is Indiana, Illinois, Iowa, Michigan, and Wisconsin, the overall 7th district saw farmland values go up 2%. Indiana specifically was up 6% year over year. So as I suggested just a couple minutes ago, farmland values are really trending fairly positively right now. And now we're looking at corn and soybean prices that might even ramp that up further. So if you're a farmland owner, that's good news. If you want to buy farmland, well, maybe you should have done that 6-12 months ago. Although hindsight's always 20/20. So here's the Purdue Farmland Value Survey. It's done every June. So if you think back to last June, what's interesting in this is that we did not see anyone think that land values went down last June. And that was a pretty questionable time, right? We were just coming out of the initial COVID scare. Vaccines were long in the horizon at that point in time. Yet in that survey, you saw all 3 land classifications move up a little bit in value. So again, why might you want to own farmland as part of your investment portfolio? Because it's pretty stable, especially in unstable times or chaotic times like we were experiencing back then. So basically, this just indicates that slight sideways channel that we've been experiencing with a little uptick toward the end. Again, mirroring what the Federal Reserve Bank was showing. So I want to talk about this sideways channel, and I left some older slides in here just because I wanted to talk about the trend. So back in 2013, farmland was trading, and this is a measurement that Pat Karst, our Vice President of Real Estate, does for us. Basically, he takes the sales that are high percentage cropland, and he takes the sale price and divides it by the weighted average productivity index of the soils on that farm. So you can map the soils of a field, any field, and it'll come up with the average productivity index for corn. And it will be somewhere probably between 100 and 180 here in Indiana. And the better soil types are going to be at the higher end of that range. And so if you see 150 bushel to 180 bushel farm, that's going to be above average. You know, that 130 to 150 range is average, and then below 130 would be below average. So we basically take that sale price and divide it by that productivity index, and we come up with so many dollars per corn bushel of productivity. And back into all-time high of farmland values, that traded somewhere over $60 per corn bushel of productivity index. And so as we chart this, you can see in 2014, that began the decline. Commodity prices were eroding, interest rates were up a little bit, and so we saw a decline from the low 60s into the middle 50s. 2015 was really the bigger decline. And what was interesting is we started the year of 2015, we reverted back above $60 per corn bushel, but we ended the year right at 50 or right below $50 a bushel. And so when you look at that, anywhere from 15 to 20% decline in all-time high land values, it occurred largely in 2015. And as that first slide of mine said, we've been in a sideways channel since that time. If you look at 2016, there's a lot of movement throughout the year. Different qualities of farms, different locations factor into that. Sometimes you'll have a real sandy farm up in Northwest Indiana, for example. It'll have a low productivity index, but it'll sell for $8,000 or $9,000 an acre because it has an irrigation pivot on it. Well, that'll skew that value up. And so you might see some of those sales pop up to the high end. But basically, all of 16 hung right around $49 a productivity index bushel. 2017, very similar, although a slight trend toward the end of the year. 2018, wow, that looks like 2016, almost similar number results. And then 2019 began the year a little weaker, finished the year stronger, but right at that average of $50. Well, here's 2020. We began the year a little sluggish, right at that average we've been at, $48, $49. And we ended the year $53, $54. So again, confirming what the Purdue survey shows and what the Federal Reserve Bank shows, our trend, our actual sales results would confirm what those opinions would be in those other two surveys. So we have not done any auctions in 2021. No surprise since it's January 7th. But here's that trend, that 2016 to 2020 5-year trend that has basically been a sideways channel for farmland here in the Eastern Corn Belt. Now, to look at it graphically another way with a bar chart, you can see that where we were over $60 back in 2013, if you go back to 2016, you might see just a slight trend up if you were to put a trend line on that. But basically just showing you another way to look at that, that sideways channel that we've been in. We do have a Halderman Companies app. My marketing department would be disappointed if I didn't promo that. That's something we just redid in the last few months, approved by both Google and Apple. So if you know, depending on your operating system for your phone, you can download that. That'll show you all of our auctions, all the auction results. You'll see them pretty real time as they come out on a regular basis. So here's a survey I did, and I hesitated to leave this information in the presentation today because this survey was done back on September 1st, and my have times changed since September 1st. That was largely before harvest. Now, we assumed we were going to have pretty good yields, but that was not yet confirmed, and commodity prices weren't anywhere close to what they are today. So I want you to think about what our survey results are with that backdrop, because I would imagine our staff, if I surveyed them today, would give you different answers than what they did on September 1st. But basically, I asked our staff, what was the change in farmland values from September 1 of 19 to September 1 of 20? And you can see that there were some opinions that maybe the best cropland was up 7%, and maybe it was down 10%, depending on location. So kind of an average of very neutral. The same with average cropland, a little more bearish, but then you saw a pretty positive response for woodlands, residential building sites, and rural residences. Livestock facilities a little weaker. And you think about hog prices largely, or dairy, they have been a little weaker up until that time back in September. I also asked them dominant purchasers. This is always an interesting question. These are our actual sales results. So this isn't an opinion. This is our actual sales results. And we'll conclude an auction or a private sale, and we will write down, was that buyer an investor, or were they a farmer, meaning they're going to own and farm that farm themselves? And you can see in 2019 and 2020, an overwhelming majority has remained the farmer. And never really goes below 50%. You got to go all the way back to 2011 for that. But the farmland investor does play a key part. And I would argue most of the farmland investors that we see are going to be local investors. Somebody from the local community that wants to own farmland as part of their investment portfolio. But you can see that weighting 60-40 in 2020, with the farmers still remaining the dominant. Now, that's our sales. I would suggest that when you look at the overall marketplace, which would include sales that are off market, meaning landowner to tenant, that percentage is probably higher on the farmer scale. Number of sales compared to previous years. Our staff back on September 1st said 75% fewer sales than they'd experienced in previous years. Largely that April through June, July time period, where we had 10 auctions scheduled for April of last year. And if you've listened to some of our other seminars, we've talked about the results we saw with those. We basically had to convert them all to online only. There were 10 auctions scheduled, 2 online, 8 were live events with an online component. Converted them all to online only. They all sold, 2 didn't sell, 8 sold right where the market was, where we expected it. But then basically after April 17th, we saw no auctions until mid-July. So the market just basically shut down due to COVID. Again, that's planting season, so that's not always an uncommon occurrence that you would have fewer sales anyway. But I think this slide is representative of that time period where we really just saw people say, hey, I'm going to hang on to my farmland. I know what it produces. I don't know what other markets are going to do, especially the stock market. And so they just hung on at that point in time. Dominant purchasers. Now, this is the question I asked, and I said, in the entire marketplace, in all of the market that you see, who are the dominant purchasers? And this I alluded to earlier. Our sales were 60-40 farmer. In this case, you see 70% farmer, 25% farmland investor, and 5% recreational. So the interpretation is that the overall marketplace continues to be dominated by the farmer buyer. Now, I've mentioned this before. I know we've had Jim Mintert speak at this, I think even a year ago, talking about the ag barometer. And so those of you that have attended that have heard him describe how they do it. I just have one slide on it because I think it continues to show the sentiment and the attitude as much as anything that exists out there today in agriculture. And you can see that we saw a little pop up. This report just came out 2 days ago. Jim's report showed that it was up to 174. Now this is a 0 to 200 point index. So no surprise with commodity prices coming up throughout the fall, better yields than expected. And oh, by the way, the government support programs that we've seen, that the producer sentiment is still pretty positive today. I think that does factor into what farmland values are going to do into the future. And so we see that as a pretty positive result. You saw a little downturn in December or really the November report. And I think that was largely due to unknowns about the election back at that point in time. But still, 167 is well above average. So let's talk a little bit about farmland debt. Still something to think about. It is creeping up, and so I think it's an important component. This is a slide through 2020 that shows non-real estate in orange, real estate debt in blue. And you can see inflation adjusted. We've now gone above what the debt was back in the 1980 time period. So overall debt in terms of real non-inflated dollars, you'd be talking or adjusted dollars back, you would talk about exponentially high. But really, inflation adjusted, we are above what we were back then. And a larger component of that is real estate debt versus non-real estate, think equipment and operating lines. But here's one of the interesting factors that I think will continue to play out, especially at the interest rate environment that we're in. And if you have questions about any farm loans, First Farmers Bank and Trust would be glad to discuss those with you. And they would confirm this. So back in the 1980s, those of you that were around in that time period, interest rates were double digits. Today, 3, 4, 5% is more of a common number, depending on what you're borrowing and what it's for. And so you see the interest expense being dramatically less. So if we go back, debt, inflation adjusted debt is an all-time high. But look at the interest expense difference. And this factors into your bottom line. And so if you're paying less interest, that is a positive to your profitability. It also is a huge factor for the federal government and the debt that the federal government has. Dramatically different than what we would be looking at if we were interest rates back of the 1980s. Now, here's another way to look at debt, and this is debt to equity, debt to asset ratio. So farmland values, while they did decline, we have not seen them crash like they did in the 1980s. And so while debt has gone back up to that all-time high level, inflation adjusted, we haven't seen the debt to equity or debt to asset ratios do the same thing because farmland values have been holding in there pretty steady. Now, they have been increasing over the last 4 or 5 years as debt has increased and farmland values have remained steady. So that's not a surprise, but still they're at levels that I would argue that are pretty sustainable long-term. Here's another way to look at debt, and this is debt divided by income. So your total debt divided by your income, which is your ability to repay. And you can see that when we go above a 5, that is a concerning ratio, 5 or above. And when that happened back in 1976, 77, that 5.5 way on the left side of this slide, that was a warning sign. And so Pro Farmer, which really tracks this, suggested 3 or 4 years ago that we were above 5, and that was to be a concern, that we needed to watch that closely. But you can see over the last 5 years, that trend line has actually been down. And here in 2020, it's a 4.2 level. Obviously, with farm incomes going up, that has certainly helped, even though in spite of debt increasing slightly over the last few years. Here's the share of delinquencies. And what I basically want to share with these couple of slides is that there's really no concerns out there. Delinquency baseline since 1990 is right about 2.3% of the loans are delinquent. And while we've trended back up to that over the last 5 years, we're just basically at that average number. Likewise, here's a non-real estate loans, basic farm equipment to operating lines. And yes, the trend line over the last 6 years is up, but basically back to what the long-term average is. Volume of delinquent farm real estate loans, billions of dollars. And so no surprise, through the golden era there, the number went down. We've gone back up, but still back just to where we were in 2010. Now, the one concerning part of debt, and we've talked about this in multiple seminars, is this working capital erosion. And of course, there was a lot of cash that existed out there after the 2007 through 2012 time period. And this chart really shows that. There was a 37% working capital to gross farm income revenue ratio back in 2012. But with lower commodity prices, lower farm incomes, you see the erosion of that working capital over the last 7 or 8 years. I bet that number pops back up as we look at 2021 because of the income, the higher commodity prices combined with the government program payments that have been received on the farm this past year or two. And then real working capital, so inflation adjusted, but again, showing that same kind of trend where we've seen it erode in overall total dollars the last few years. Wow, it was pretty favorable back there in 2010, 11, and 12. And so with that excess cash out there, really no surprise that we saw farmland values go to some of the levels that we did as that cash got reinvested into assets that farmers would own for a long period of time. Bankruptcies. I did read that Iowa bankruptcies were up this year, and I didn't see the data on that. But because I read that article, I left this slide in here. I don't think this is going to be a major concern in 2021, thankfully. But I did leave it in here just for perspective. Those of you that have been to my seminars have seen this before. But in 1987, there in the middle part of the slide, all across the United States, the entire country, almost 5,800 bankruptcies, Chapter 12s were filed that year. In 2008, that had dropped to 250, almost a negligible number, not to those that had to file, but a pretty low number at that point in time. Now you can see where we have trended to. In 2018, that got to almost 500. In 2019, it was over 600. So that was a 23% increase. So that's concerning, right? But I think perspective is important. And while it is concerning that we are increasing, we're still somewhere well below 1,000 bankruptcies across the United States compared to where we were back in 1987 at almost 6,000. So keep them in perspective. So where do farmland values go from here? Depends on these three things. And typically has always depended on these three things. One is farm incomes. And so no surprise really that back 2007 to 2013 made a lot of money. That working capital increased. So some of it was reinvested in farmland, and we saw values go up during that time period. Likewise, we've seen farm incomes lower since 2013, and that cash drain, that working capital has eroded, and farm values then trended downward, at least initially in that time period, and then have remained steady. So farm incomes have a significant factor, maybe 50% of the weighting on farmland values. So let's talk about interest rates, because they are important as well. And interest rates this past, 9 months have dropped quite dramatically. I talked earlier about the number of appraisals that the Halderman companies did, a lot of them for basically refinancing. If you look at the housing market in the United States, a lot of that was driven off the fact that interest rates are extremely low in the housing residential space, and that helps drive that market as well. So interest rates are a factor, and we'll talk about why in a second. And then supply of farms. And so the supply of farms that we see for sale, supply and demand, it's always an economic driver, that supply has really remained pretty low, below average for 4, 5, 6 years. One of the reasons for that is that there was really that, I mentioned earlier, no outside driver, no tax law change, no farm bill change or something like that to cause people to want to sell. But if you go to, there was a study that Iowa State University did a couple of years ago, and they looked across the entire state of Iowa, and they said land ownership, the number of mortgages on land in Iowa, farmland in Iowa, they tabulated it all up, and 80% of the farmland in Iowa has zero debt. So even though incomes were challenged the last 5 or 6 years, we certainly have not seen a tremendous amount of debt out there on farmland, and therefore no real stimulation to have to sell farmland. So that supply number has remained below normal. So when you look at those three factors, farm incomes are the heaviestly weighted. They've been down, so farmland values came down. But interest rates and supply really have been, compared to long-term historical numbers, they have been both bullish throughout this entire time period. Now, before we talk about the great times that maybe we're looking at right now, if you were to sell corn at $4.90 or whatever the price is in Tipton County today, $13 soybeans, that's great times. You know, those are numbers that we've seen very briefly in terms of long-term commodity price history. Very brief periods in history have we been at that kind of level. But if we go back 6 months ago or 9 months ago, we weren't looking at commodity prices at that level. And government support has been absolutely critical the last 3 or 4 years. When we got into the trade wars with China, lower commodity prices, and we saw the TFP, the trade market facilitation payments that really helped offset some of the declines in commodity prices. Likewise, the CFAP payments that have come out this year to help offset the COVID problems that were related to, that impacted commodity prices back in the spring. So don't miss that government support. We'll got to talk a couple about at least a couple slides on that. And then interest rates still historically low. And I always like to make the point when we talk about interest rates, my first car loan in 1988, and this was after the highs, my first car loan in 88 was 8%. And so when you look at your ability to borrow money on farmland and somewhere in the threes today, that's a pretty appealing interest rate. And then, as I said earlier, farms for sale are about 3/4 of the normal 2%. Farm income. So we'll talk a little bit about that. You know what? I changed this slide from what I had earlier. Farm income, $700 to $1,000 an acre gross. Now you might be laughing and say, well, Howard, what are you growing hemp to or marijuana to grow that $1,000 an acre gross? No. Who out there had 220 bushel corn this year? If you take that times 450, you start to look upwards of $1,000 an acre gross. If you add in the government program support payments, you might be close to that $1,000 an acre gross. So that's not out of the realm of possibility, but certainly farm incomes have moved up. Now, I'm not suggesting everybody sold 100% of their crop at that level. Likely you started selling back in September when prices had moved up. You took advantage of better pricing opportunities because we didn't know what the future held. So I fully get it that your average won't be there, but the potential does exist on some instances. Total production costs, you can see this is the basic estimate from our staff, you know, what it cost with rent to put out an acre of corn or soybeans. Highly variable, especially on the beans, largely dependent on how farm operators choose to spread their fixed cost across the farms. So that last point on this slide, I think, is important. Demand is certainly up for farmland to rent. And that's not a surprise. When you see higher commodity prices, typically demand for rent goes up. Now, I pulled this slide out of a presentation a couple of days ago because I thought this was important to get the most updated numbers to you. And so right now, USDA is projecting net cash farm income, and I know this is a little bit blurry, but net cash farm income to be up to $134 billion. That is up substantially from earlier predictions. And then you can see the net farm income, the green line or the blue line, depending on your slide, is up to $119 billion, up dramatically. And that's the government payments combined with these higher commodity prices. So that's why I suggest to you out there that there is some additional demand for rent. And likewise, that's going to follow through into land values. Now, let's talk about that impact of USDA payments in a graphical chart. Here is the real government program payments to farmers going all the way back to 1970. Don't miss that 2020 is the all-time high number. This is inflation adjusted. Yes, there were some substantial payments made around the year 2000. Yes, there were some in the middle 80s, but this past year eclipsed all of them. And a lot of that was due to the COVID relief that we saw coming out, as well as the market facilitation payments. So here's the farm income and direct payment breakdown. So 2020 net farm income is going to be up, but that orange part of that bar is still fairly substantial. If you look at the blue part of the bar, net farm income, yeah, it's up a little bit from last year, but it really isn't above 2018 and 2017. So without the government program payments, 2020 wouldn't have been as special a year from an income standpoint as what it ended up being. And then real net cash farm income less government program payments is actually trending down. Now these guys with out of Nebraska, Brent Gloy helps put this newsletter together. You see the watermark back there on the slide, AEI. .ag. I would highly recommend you look at that website. They send out a weekly newsletter. It's brief in terms of a read and a lot of really good information. And some of these charts I pull out of there. But I really thought this was impactful. When you look at the actual inflation adjusted net cash farm incomes, when you take the government program payments out, actually 2020 is still down. And that was due to those low commodity prices for what, 7-8 months of the year, almost 9 months of the year. Here's the Indiana farmland cap rate. And I want you to think about this. So what this is net, it's easiest to think about it in terms of cash rent. So take cash rent less real estate taxes, insurance, and you end up with a net cash return per acre divided by the value of the farm. And that's been hanging right around that 3% number for the last few years. That compares to other investment alternatives that an investor might consider. So if you looked at CDs, those rates are point something today. They were above, you could get up to 2% the last few years, or maybe 2.5%, depending on the term of the CD. But CDs don't have any opportunity for appreciation, but they are a barometer to compare to farmland investing. But the interesting thing is, how does this compare to the cost of the money you might borrow against the farmland return? And for the last few years, interest rates for your borrowing have been above the 3% cap rate. And so you really don't enhance your overall internal rate of return by using debt to buy that farmland. However, today, depending on what financial institution you talk to, those numbers are a little more comparable. So if you used a 50% debt on a farmland purchase, you could be looking at a situation where your overall internal rate of return is actually enhanced a little bit with the cap rate somewhere around 3%. But that just shows that sideways channel, again, that we've been in from an income and value standpoint. So we'll talk quickly about leasing. I think this 2017 Ag Census data is kind of interesting in terms of the consolidation. And no mystery. Everybody knows that this is well underway, both in livestock, more in livestock than it is in grains, but it is underway in grains too. 2002, 6.7% of the farms produced 75% of the overall sales. That number drops to 5.16 in 2017. Again, not a surprise. What is interesting is that next point, the fifth bullet point, farms producing 75% of the sales. So the largest farms out there, it's only 5% of them. They own 37% of the equipment. So a majority of the equipment is owned by the people producing the smallest number of sales. Yeah, we've known for years that most farms have more equipment than what they need. And if you're a farm producer, you're going to sit there in your office today and say, yeah, Howard, when we have 1 week to plant that's dry in Tipton County, we need to go. And I get it. You need the bigger equipment to be more efficient when the timing is right, because we have narrow windows for planting and harvest. So that is the argument as to why those numbers are what they are. You had over 10% of the farms out there, the largest farms, over 10% of them had some organic sales. I found that interesting. And then under expenses, those largest farms did so on 70% of the expenses. So they had 75% of the sales, but they did it on 69% of the expenses. So therefore, scale has benefits. They're able to buy things cheaper because they're buying larger volumes. So cash rents, this was our opinion. Again, our results, our opinions from September 1st. So I would argue that all of these would be more bullish today than what they were then. Back then, early in the fall, results of any 2021 cash rents negotiations, and you can see that most of our people hadn't negotiated any rents back at that time, but most people were looking at steady from 2020 rates to 2021. I asked, would you lower any cash rents? And surprisingly, today, you might say this is crazy, but 7 of our area representatives were willing to lower cash rents back on September 1st. How times changed in the last 4 months, basically. The consensus back then was that ultra high rates will come down, but otherwise we were anticipating a steady leasing year from 2020 to 2021. And then you would have some random changes on individual circumstances. I asked about demand, and you'd think coming through COVID, maybe demand would be a little lower. So what we saw is, first of all, is there more or less of the same amount of farmland for rent in 2021 versus 2020? And there were more. At that point in time, the feeling was there were going to be more farms available for rent. But demand was basically going to be the same, maybe a little weaker. Now, same means that it's fairly strong because we've had pretty good demand for farmland throughout this entire time period. Would you have any tenants default on leases? 0. That's not an uncommon number for us. Will you have tenants give up the lease rather than renegotiate? And again, those of you out there listening this morning may be laughing, saying, well, no, I wouldn't give it up. Well, that's easy to say today with what commodity prices have done. But if you go back to September 1st with $3.50 corn, that's a different answer maybe. And you can see that 5 of our people thought some tenants would give up their lease rather than renegotiate. Cash flex leases. This is the argument for cash flex leases. Most of our people have implemented a high percentage. That's that point on the bottom. And I really think that's a fair way to do it when you see commodity price swings like what we've experienced this year. Yields were above average, probably, 5-year average maybe, above that, but not super in many instances. But basically, when you see these commodity prices do what they've done, that cash flex yield type of lease really helps generate a bonus when a bonus is due, when it's a good year. And when you start to look at the government, the net cash farm income escalating the way it did, should the landowner maybe share in some of that, and it's lower than 50% of the upside, maybe 25 or 33%, yes, the landowner should benefit from that. And that ensures long-term tenancy, and it eliminates the risk of a tenant losing a farm because somebody offers a super high cash rent. But I think all of those results probably would receive a different opinion today than what they did back on September 1st. Base gross revenues in those cash flex leases, our range was anywhere 600 to 750 an acre on corn and 450 to 550 on soybeans. Midpoint of that would probably be the base gross revenue number that we would be using most of the time. And would we change any base cash rents? And again, we were looking at a pretty steady negotiation year over year. Here's the Purdue survey on cash rents, and you can see them ticking up for 2020, pretty much across the board. Again, this was for 2020, not for 2021. I would imagine we might see a tick up again in 21. And then here's the USDA survey, and you can see over the last 4 years, a slight upward trend there as well, just like the Purdue survey shows. So where do we go from here? And in the last 15 minutes or so, we'll wrap this up. So long-term world demand fundamentals remain bullish, and we're seeing that play out. And I added this point there at the bottom, just-in-time delivery impacts. For years, I think there was a lot of grain that was stored around the world. in a lot of different locations. And we've seen the impact of the just-in-time delivery mentality. That's existed in manufacturing for a number of years. But I think in agriculture, we've gotten to that point. And so when you see China expand their swine herd quite dramatically, like they've needed to, when you see the impacts of maybe a drought in Argentina this summer for them, a winter for us, that just-in-time delivery starts to have a material impact in commodity prices. So that long-term world demand fundamental exists. It does play out, and especially at times like this. Interest rates still favorable, and you can see that 4.24% real estate mortgage rates in the 7th district. That is the lowest, and that's a 15-year fixed rate is the way they asked that question. That's the lowest ever in recorded history for the 7th district. So when I talk about interest rates being pretty favorable, they are. Supply of farms for sale remains low and even lower right now. You know, I looked at the farm papers this week and there's just very little even being offered out there. So supply is positive from being a bullish. And then, but government support for 2021, that's a couple question marks, maybe 10 question marks. One would argue that I wouldn't count on much. You know, you've got ARC and PLC, the part of the regular program, those may not even pay out. And hopefully we'll see support for crop insurance not change, it shouldn't change. Hopefully the RFS remains where it is. And if that's all we get, that might be all that you see. We may not see additional government support in 2021. I certainly wouldn't put it in the budget. And is cash increasing? And I suspect it probably is, based upon the farm incomes from last year. Cropland values are in an uptrend. You know, 6% was kind of the indication from the Chicago Fed Reserve. Our trends would show that kind of increase. And we see for seed markets in timber, recreational, and rural residential, they were stronger all last year, and they probably continue to be fairly positive. We still see those average to below average farms, those hassle farms, being less desirable. And we had a few of those this fall that we offered, and the bidding was just weaker. It was just slower. And so there's still that desire for that average to above average farm, that more efficient to farm is in demand out there. So where do we go from here? Now I'm going to tell you, the bullish side of me wins on this. So really look at this. And when you look at this slide compared to the bearish one that's next, right now the bulls are winning. You got profitable prices, both for 20 crop as well as 21 crop. Low amount of debt to assets in agriculture, low interest rates, low supply, biofuels. Got to watch that. But does the Biden administration really change the RFS to any large degree? Right now, ethanol plants aren't making much of any money. So I think that bears watching. World population growth, we know that one. Trade deals have been helping, I would argue, over the last 12 months. Potential for inflation, it certainly exists out there with all the money that's been printed by the federal government. And then water resources and competition, and we sit in a pretty good spot with regard to that. So I said the bearish slide is my loser today. These are things that could happen. And then really the question I have for all of you, what's the black swan this year? What is the black swan event that was COVID last year? We don't know what that will be. No one can predict the black swan. That's why they're named that. But last year we had that pandemic. We had the COVID-19. Is there a mutated version of that has an impact on demand or prices? Or does the vaccines basically and herd immunity get us past this? That's really what it will be interesting to watch over the next 2 or 3 months. You've got weather impacts and trade. Right now, Argentina's dry. What happens if it starts raining in Argentina and Brazil and the crop prospects change down there, combined with pretty good crop prospects for the US this year? That could have a negative impact on prices. Trade. I don't know how that'll go with the Biden administration. You got to watch that. Global production, it's been enough. That could lead to lower commodity prices. You could have the worldwide economy tank. Again, I'm not arguing for any of these. I'm just pointing out these are things that could happen that could be a problem. biofuels RFS mandate, trade agreements. Interest rates could eventually start to increase. I thought it was interesting yesterday. I don't know if anybody pays attention to this, but bank stocks. You know, the overall Dow Jones didn't move a lot yesterday, but bank stocks went up dramatically. I've got 3 that I have on my 10 stock things on my iPhone, and all 3 were up fairly substantially yesterday. I would argue that that suggests that there is a feeling that interest rates might be going up, and net interest margin, which is the biggest income driver for a bank, would go up as well. So that's the bearish side. Interest rates increasing would be maybe negative on farmland values. So other asset classes, you got to watch the returns, the stock market, but really more so liquid treasuries and CDs. Right now, farmland's a winner in that. Does that change somehow? Working capital concerns, I kind of think that's over for right now for 2021. But we were at a pretty low number coming into this year. So I think right now you got some pretty bullish fundamentals. You got higher prices. That's going to equal demand for rental land, and that's going to equal higher land values. So if I've got any prediction for this year, I think probably slightly higher rents combined with higher land values will be the theme. Higher, maybe 5%. I don't think we go crazy on this by any means, but certainly we're in a bullish uptrend, and that probably follows through to land values as we look forward. So with that, Stephanie, what questions have come in?
Okay, so we do have, the only question in the chat box is if you're willing to share your presentation with participants today so they can look back on it.
So great question. Austin is recording this. So if you want to, not that you want to see me again, but you could, and you could get a recorded version. But yes, if you share your email address, and you've got my email address here on this slide, so you could just quickly write down howardh@halderman.com, shoot me an email, and I'd be glad to send you this presentation. So yes, it is available to answer the question quickly. And that's how they would just reach out to me, and I'll get it to them.
Awesome, thank you. Do we have any other questions for Howard before we transition to something else?
Well, again, I want to thank everybody for joining in. I think our participant numbers are nearing 100, Austin. That's outstanding. Just really excited about where agriculture is headed in 2021. Again, we're an essential industry. We've been blessed. There are many industries that have not been. And I feel for all of those folks, pray for those folks that are in the restaurant, hotel, and hospitality trade. Hopefully this COVID will pass soon and we'll be able to get back to more normal times. But agriculture has been blessed, and we're thankful for all the work that you do as producers out there. And at this point, I think, Austin, you'll transition to some topics that will help them maintain their licenses or certifications for this year.
Actually, we got a couple of questions that have come in through the chat box here. How should we handle Carter-era inflation and interest? We farm and invest in farm and run a global manufacturing company. Inflation pressure is among us.
So historically, farmland, it performs well, and it's an inflation hedge. So if you are invested in farmland during inflationary time periods, that tends to be a positive. At the same time, I would be cautious on debt. So if you're borrowing money to buy farmland, make sure you fix your interest rates at these low levels. If you go back to that Carter era and the high interest rates that we experienced, a lot of the mortgages were on a variable rate. I think that would be a no-no today. I personally buy with only fixed rate mortgages at these levels. So I think that's how you could kind of insulate your business, is trying to do things more on a fixed rate at low interest rates and stay away from debt if you can. But farmland, from a value standpoint, tends to perform well during inflationary times. Was there another question, Austin?
Yeah, I have one that was sent to me directly. Any comments specifically on what kind of effect an elimination is in stepped up basis or elimination of the 1031 exchange might do to the farm real estate market?
Another great question. That is something that I think bears watching. So right now, if Farmer Smith owns his farm and he passes on, it gets a stepped up basis, and then the heirs could sell that in theory at that appraised number and not pay any capital gains tax. If that loophole goes away and you don't receive that stepped up basis, that would argue that those heirs, when they inherit the farm, might look at it and say, well, gosh, dad paid $1,000 an acre. It's now worth $8,000 or $9,000. We don't want to pay that capital gains tax, so we'll just hold on to the farm. So it may argue for lower supply, Austin, a fewer number of farms out there for sale, and certainly more costly to sell. And now, if they eliminate the 1031 loophole as well, then those heirs could look at it and say, yeah, I want to sell the farm and I'm going to trade it. I'm going to do a 1031 exchange into property elsewhere. If that's gone as well, I think that really slows down the trade of farmland that you see to some degree. Likewise, we do see some 1031 exchange money that rolls out of residential development into farmland. And so that could, to some degree, offset, I suppose, the lower supply because you would have less demand from those 1031 buyers. And that really would be an impact in areas like Tipton County, where you're in that donut county around Indianapolis, and you really see a lot of that 1031 money from those larger metropolitan areas spinning out. Any other questions?
Yeah, so we have a question here. They were asking if it's recommended they would purchase as much land as they could at today's interest rates.
That's a good question. Personally, I'm buying land. So should you buy as much as you can? I think ability to repay needs to be a factor in that decision. And you need to project out, can I make these payments under a wide variety of scenarios? I sit on a bank board, and one of the things we have to do is stress test. And so I'm going to buy this 160 acres. I'm going to borrow 50% of the purchase price to do it. That's going to cost me X amount of dollars per year on this fixed rate mortgage to pay it back. So stress test it. What kind of commodity price times my average yield must I achieve to make those payments? Paying off all the other costs, management, life, living costs and all of that. And that really needs to remain how you make those business decisions, is that ability to repay. Where we got into trouble in the late 70s was a lot of there was a buy all the land you can, use debt to do it. And the ability to repay was less of a concern or less of a factor. I think it needs to remain a primary factor in your decision making. So I wouldn't go out and buy land willy-nilly at these low interest rates just because they exist. It's really, can I make the debt payments? Can I service the debt? And can I do it at 325 corn? And can I do it at 425 corn? And that would be what I would want to look at.
Thank you. I've got one more question here. How much farmland does China own in the U.S.? And I don't know if you'll know that, but
I don't, Austin, but I would tell you it's a very low percentage. They own other forms of real estate in the United States, but I am not aware. Me personally, I'm not aware of any purchases of land by a Chinese organization. Now, we manage land I have a Danish client. I have German clients. I have sold farms to Argentine groups. So certainly there is foreign ownership of farmland. Make no mistake about it. It's a very small percentage of the overall marketplace. But I'm not aware of much of any Chinese-owned land.
Okay. All right. Well, thank you. I'm not seeing any other questions here. Howard, thank you again for your flexibility and being able to present on today's call. I think you did a great job, and hoping that the audience enjoyed viewing it from either their office or on their couch or wherever they're enjoying it from. So feel free to stay on the rest of the meeting. We will have another segment here. We're going to briefly turn it over to Jeff Rodabaugh with First Farmers Bank and Trust. Jeff is on my Ag and Natural Resources Advisory Board, and really just kind of enjoy his feedback and input on the ag community here. So Jeff, why don't you go ahead and take it away?
Sure. Good morning. Nice job, Howard. Really appreciate your comments and perspective on where we're at. Austin, you've done a terrific job, and we're blessed to have you in Tipton County. So thank you to Austin, Purdue Extension, the Halderman Group, all for continuing to host this meeting. What a 2020 year it was. I'm not really a roller coaster rider, but it surely was, from price fluctuations, dramatic supply demand chart changes, which made us all probably market our grain earlier than what we really would have liked to in hindsight. But with those government payments and strong yields, I think everybody probably had a pretty good year throughout our area there and the Tipton County area and up through the northern part of our market place. But there's definitely parts of our Midwest that did not have as good a year as what we're seeing there if they didn't quite get those yields. So, but through all of that, uncertainty and everything, even there through that August timeframe, First Farmers, we've continued to look to grow our ag portfolio, look to grow with each one of you. And so as far as a timely update, I would be remiss if I didn't point out there is another round of PPP, Paycheck Protection Program payments that will likely, many of you will be eligible for. We believe they've went back and maybe clarified some of the rules to where if your gross income or if your net income was negative in 2019, which would have made you ineligible as the sole proprietor, we think that they probably changed that and based it on gross income. So you still may be able to be eligible for around $20,000 that you would not have been able to be eligible for in the first round. So please contact your First Farmers loan officer. We've got a strong team there locally. I know on the call and there to support you, Mark Raver, Tom Dozel, John Coulter, RJ Logan, Ryan Harrell. Also, if you come up further north, Amy Osborne, Alec Downing are both on the call too today. Any of us can help talk through some of those, Paycheck Protection Program applications. The final rules and some of the details just came out within the last hour. We've been reading them. If you'd like to get more information on that, please contact one of those individuals. They'll get you on our email list and make sure that, it's one of those things where when the government's handing out dollars, they're going to get it back from you at some point through taxes and different things. So if you're eligible, you probably need to look into it further. Do want to invite everybody to our 26th consecutive Ag Summit. Unfortunately, it will be virtual. It's not our first choice. We held on as long as we could. But on January 26th from 9 to 12, we're going to focus on grain marketing, farm financial statements, as well as the future volatility. Howard touched on black swans. Somebody that likes to talk about black swans is Dr. Dave Cole. He is one of our speakers that day, as well as Dr. Barnard, to talk about our balance sheets and what we need to do as we really champion the successes that we had in 2020 and look forward to whatever may come our way. Dr. Angie Setzer was another speaker that we had a few years ago that folks really appreciated from a market perspective, and she'll be on to kick off our day on January 26th. So if you'd like to attend that, please be looking for our social media invites as well as text messages and emails. We'll be getting those out here momentarily. So expect to see those in the next couple of days. Look forward to having you join us. And overall, we just appreciate our longstanding relationships that we have with all of you. We appreciate having a seat at your kitchen table. It's one of our greatest life pursuits. We really enjoy that. And we really look forward to being able to shake your hands again and getting through this pandemic and moving on to brighter times, less uncertainty. So again, thank you for joining us today. Good luck with the rest of the seminar. Appreciate each of you being on and just to better yourself, better your operation. It's definitely something that we look as a positive for you when we see you out and about and getting to learn more. So Austin, good luck for the rest of the day. Thank you again for putting this together.
Hey, thank you, Jeff. And thank you, Howard, again. Without the partnerships from First Farmers Bank and Trust and Halderman Real Estate and Farm Management, it'd be difficult to pull off this program, especially with the number of participants that we have. And yeah, we've got, we're pretty close to topping 100 now. So It's pretty awesome to be able to have this, and it's definitely more than what we typically have in person. So briefly, before we transition into the PARP, I wanted to mention to you all that we do have some additional programs coming up. So if you have not seen, there is a Grow Your Farm Operation program that begins next Tuesday night. I will be talking, we'll have a soils talk about that's more geared toward precision agriculture, but then I'll be leading us through a web soil survey, and then also another tool that can help you realize and understand different soils that are on your farm. This is a weekly adventure for several weeks. It begins January 12th, and you got a couple more days to register. I'll send this out in an email toward the end of the program this morning, or even before noon this afternoon. So we got a lot of different topics with that program. There is a cost with it, but I think there's a lot of value with that program. Also, the Beginning Farmer Workshop is coming. Amanda Baird, our other ag and natural resources educator here, is involved with that. So she's also she's a diversified farmer here in Tipton County, and really kind of focused a lot on beginning farmers. So here's the dates and times for that program. Registration information is also down there. Contact Amy Thompson. There's actually a newer version of the flyer that's out that actually has a registration, so I'll include that in the email as well. Purdue Crop Management Workshop is also coming up. So if you need more credits for that, there is an opportunity for you to be able to join for that. It is also, I think, live streams for you all. So if you register, you'll get a link to that. It will work fairly similar to how today's program works. Also on February 6th, yes, that is a Saturday. We're going to go ahead and try something out. We've got an in-person PARP and category opportunity for you. So that'll be out at the Jeff Stout Community Center in Rushville, Indiana. Myself, Adam Shanks, John Scott, pretty much all the presenters that are on today will be presenting that day. We've got a couple of additional ones that will be there. So lunch will be provided with that. There is a registration of $45 with that. It'll include your corn and soybean field guide, digital downloads, and lunch will be provided. We do have a virtual option for you there. So if you don't feel like coming in person, you can also join that virtually. And so you'll be able to do that as well. We've also got another soil health seminar series that's coming up here. This is the partnership between Howard, Tipton County Extension, and also the Soil and Water Conservation Districts. We've got Keeping Nutrients on the Farm. And so we have a pretty cool opportunity with Dr. Chris Nichols. She is a soil microbiologist. She's going to talk about how soil health practices influences soil biology. And then on the 17th of February, we've got Dr. Shalimar Armstrong and his PhD student, Richard Roth, talking about how to, of the nutrient returns from cover crops, soil health practices. So what you're actually getting from investing in those practices as far as a nutrient standpoint. And then Rodney Rulon, a farmer for several years, been implementing a lot of cover crop practices, is going to talk about his experience with nutrients on his farm. Also, any women in agriculture interested, we do have an Annie's Project program that's coming up. So if you see that, I'll also include that in the email that I send this afternoon. And then also we have another program. This is the UAV program that's been fairly successful for us. This is actually going to be in Boone County, but there is going to be virtual access for you to be able to join the meeting. It is a 4-session program. It is $200 to do that. But we're at a very high pass rate for people to go get the remote pilot 101 or the remote pilot certification through the Federal Aviation Administration. Been a fairly successful program. It was adopted to a college level course at Purdue, and we're in the process of rolling this out to high schools and career centers throughout the state through a curriculum that John Scott and I have been working on, and Adam as well. So we've got a team of educators that have done that as well. So without further ado, that's enough for the commercial there. But I wanted to introduce Adam Shanks. He is the Clinton County Agriculture and Natural Resources educator. We're going to go ahead and get into the PARP program for today. And Adam, go ahead and see if you can share your screen. All right.
Can you see me now?
Perfectly. Yep.
All
So
right.
what's going to happen is we're going to go through the PARP. Everyone that pre-registered for their PARP credits, I've got a team of educators, Stephanie McCauley and Amanda Baird. Thank you for allowing. Thank you for donating some of your time this morning to be able to help me out and make sure we get everyone accounted for. We have an Excel sheet where we're going to be going through and making sure that you're here and on the call throughout the program. If there's any names that we can't find, we're going to end up doing a roll call here at the ends, and then we'll try to make sure we get everyone accounted for. If you have not paid for your PARP credits, I'm going to drop a link in the chat box. So make sure you can navigate to find that. So that way we can get those things taken care of. We don't have to worry about it moving on after the program ends. So, all right, Adam, the floor is yours.
All right. Well, good morning, everyone. Again, my name is Adam Shanks. I am the Ag and Natural Resources at Purdue Extension educator here in Clinton County. I'm not sure how far we're reaching this morning, but if you don't know where that's at, the big metropolis of Frankfort is nestled here in the center of our county. So that's where I'm sitting today, is in Frankfort. I am a certified crop advisor, and I got to give props to a colleague of mine, Larry Temple. He is a retired Purdue Extension educator. He initially put the majority of this presentation together, but there's a lot of good information in here. So we'll try to keep it lively. We're going to talk about a wide variety of things this morning, but we're going to focus mainly on phosphorus and the 4 R's, how to keep that nutrient where you place it, when you place it, and all that good stuff. So with that, we'll dive in. So why do we want to talk about this? Why is this important to look at nutrients and be keeping them where we place them? Well, A, they're not free. I mean, there is a good cost to applying these nutrients. Yep. And B, there's we've all seen the Gulf of Mexico, the Lake Erie Basin, the Chesapeake Bay, the issues that are arising, from the off-site movement of these nutrients. And we want to make sure that we're doing the best we can to keep those nutrients in place. We want to do it ourselves before we're mandated or regulated to do it. So we're going to take a look at some ways to do that. I'm going to stop my video actually because of the bandwidth here. So I'm going to stop that for now. And that way I don't have some internet issues. Come on, advance. There we go. Okay, so phosphorus. Phosphorus is immobile in soils, and basically what we're looking at is soils are negatively charged, and phosphorus is positive. So what we're looking at is that this phosphorus is actually bound to the soil due to magnetic force, and we see that it doesn't really move through the soil. The way that it gets away is through soil erosion. It runs off with the water if it's in the solution. And there's no one answer to help prevent the loss of phosphorus through mobility. And the 4 R's may help, but there's lots of different practices that we need to look at to keep that nutrient in place. So what are the 4 R's? The right rate, the right source, so the right type of fertilizer, placing it at the right time, so looking at where we're going to be needing the uptake of the nutrient versus when we apply it, and the right place, so make sure we get it in the root zone. Phosphorus is only taken up by root interception, so that means since it's immobile in the soil, the plant root has to directly touch the phosphorus to uptake it into the plant. So making sure that we get that right in the root zone is very important. And there's no one answer, and there's no one size fits all for the 4 R's because there's different tillage options. Everybody's doing different crop rotations. So there's no one size fits all program. It all has to be customized based on your management practices. So when we look at this, Dr. Tony Vine at Purdue, soils loosely hold reactive phosphorus and can move in the soil solution to balance plant uptake. So if we'll look at the color chart here again of what that means. But traditional soil tests measure dissolved phosphorus. So dissolved phosphorus is what's in the soil solution around the soil particle itself, and just a portion of the reactive phosphorus. So to represent the amount of P in the soil can supply to plants. So soil tests right now, the Bray tests, look at mainly what's in the soil solution around the soil particle and a little bit of what's on the soil particle. And we'll talk more about that shortly. So there's three forms of the phosphorus around soil. You look at the stable, so that's bound to the soil particle. And then there's the yellow, which is reactive. So that can be bounced off of the soil into the water solution. And that's, we're looking at what we call the cation exchange capacity with that. So what does that mean? Well, soil's negatively charged. Cations, if we remember back to third grade, our teacher would draw a picture of a cat head and the nose would be a positive. So that would be a cation. So cation exchange capacity is the ability of a soil to hold the positively charged particles until something else comes along and bounces that particle off of the soil into the solution. So the more surface area, the higher this exchange capacity, the more surface area, the tighter that it holds on to those nutrients, and then it takes more of a chance to bounce off a nutrient into the solution. So like a sand has a low cation exchange capacity, it can easily have nutrients bounced off and released, where your clay has more surface area and binds those nutrients tighter to the soil particles. It takes more to bounce off a cation. So that's a little bit about how phosphorus and soil binds together. But you can look at the red peas are bound to the soil. They're unavailable. The reactive P, we look at those, and then the dissolved P. So basically your soil tests right now, are they really giving you a true measure of the phosphorus that's available in your soil? If they're just looking at mainly the green ones and a little bit of the yellow ones, there's a whole lot of red that's not being accounted for. So that's one thing we'll talk about. They're looking at doing with the Bray, looking at moving towards a Malick 3 test that will have a more accurate judgment of what's going on with the phosphorus level in your soil. So there again, that just talks more about what we were looking at. The reactive P is solid that can be easily released to the soil solution. As the plant uses phosphorus, the ability of the reactive P to replenish the soil solution, or the soluble P, gives the soil phosphorus fertilizer for the crops. So that's just what we were looking at there in the solution. So now we've got a little bit of a background here of how phosphorus works in the soil. So let's look at what it means with the 4 R's. So again, 4 R's: the right place, the right source, the right time, the right placement. You guys will be able to recite all these by the time we're done. So soil test to ID the current P values. Everything we do management-wise starts with a soil test. We've got a soil test regularly and consistently, so we have a baseline and can measure change. If you're looking at phosphorus, you're going to get a soil test a value in parts per million. We all know you take that times 2 to get pounds per acre. So if your soil test P is 50 parts per million, you have 100 pounds per acre phosphorus in the soil. And you also want to take into consideration next year's crop removal rate. So each crop has a different rate of phosphorus that it requires or removes at the time of harvest. And we always recommend, you're looking at the tri-state fertilizer recommendations, for Indiana, Michigan, and Ohio. And that tool provides the recommendations of P2O5. So here's just a copy of the tri-state fertilizer. This is what it looks like. And then the chart on the right tells a good story. So basically you've got your maintenance range, which is between your critical level and your maintenance limit. So if you want to keep that phosphorus right in that maintenance range, because that's where your soil and your crops are utilizing the most phosphorus, and you're not putting on too much, and you're not shortcoming yourself on phosphorus availability. So on the right side, on the high side, that's where you have extremely high phosphorus rates. So that's where you're looking at the 20 acres behind the barn lot where dad and granddad and maybe even great granddad would clean out the barn and dump manure all winter long. You know, they didn't want to sit out on the WD or the M and go 2 miles down the road in January to put manure on a different field. You know, it was easy, it was convenient, it was time efficient to just keep putting it on that back 40. Well, now they've got tremendously high phosphorus rates. So now we don't have to apply as much. We're in the drawdown phase. We want to utilize that phosphorus that's there and draw it down. On the left side is low phosphorus areas, and that's where we have to add a little more phosphorus fertilizer each time to build that level back up to where we need it to maintain crop removal. Again, I said this a minute ago, so the new fertilizer recommendations are moving towards the Malic 3. Basically, we're trying to capture more of that true picture of the phosphorus that's in the soil, where the Brayer 1, you know, has been the standard for many, many years. We found that it's maybe not giving us a whole picture of what's actually in that soil. And you can see down here, you know, if your corn, soybean, wheat, alfalfa, where your Malic 3P actually looks at. So this is just it's actually a part of one of my soil test results I got back this fall. This is from A&L, and they're actually still looking at the Bray 1. You know, and I'm at 16 parts per million, so 32 and 36 pounds of phosphorus per acre. I'm a little low. I need to be into that buildup phase going forward because I'm running a little low on the phosphorus. So crop removal, again, that's the other key important issue there on how much phosphorus you need to apply. And, you know, we're looking here at the corn, it takes off 0.35 pounds of P2O5 per bushel. So if you average 200 bushel per acre, you can take that times 0.35. You've effectively removed 70 pounds of P2O5 per acre from your corn. So that's how you can figure what you need to calculate back in when you apply phosphorus for the next year. So the critical levels, this is a chart that's looks at, again, for the potassium side, you can here see the CEC levels and what each one looks at for removal. So you have, let's see here, CEC amount of cations. Yeah. Basically, if you look over here at the parts per million or pounds per acre, this is what needs to happen for each crop you need to add in. And you can see as you get to a higher CEC, it takes more of the product because it's more tightly binding the nutrient to the soil. So it takes more added nutrient to bounce that nutrient off of the soil particle to the solution where the root can uptake it is basically what we're looking at on this slide. So your phosphorus and potassium fertilizer recommendations are obviously soil test based. There's many ways you can do soil tests by grid, by soil type, by zone. There's many ways, but the important thing is to definitely start with soil tests to get a baseline of what you're needing to apply. Phosphorus fertilizers, we're going to talk a little bit about organic and inorganic. Organic obviously is your manure, your inorganics are your processed fertilizers here, commercial fertilizers, your MAP, your DAP, your ammonium polyphosphate starter. These are water soluble fertilizers readily, and they dissolve in soil and release phosphorus and nitrate as they break down. The nitrate rapidly converts to nitrite, which is subject to leaching and denitrification. When these fertilizers are applied in the winter to frozen ground, both phosphorus and nitrogen can be lost in runoff. So you really want to watch applying fertilizers to frozen ground when you're going to have rain coming, or if there's snow and the snow melts, it can definitely carry the fertilizer off site if the ground's frozen underneath. And then also you can look if it's too wet, you can get into leaching if the ground's not frozen, or denitrification, which we can converts a lot of your nitrogen into gas, which is released into the atmosphere, which we all know there's lots of nitrogen in the atmosphere. We just can't capture it and make it into a usable form for the crop again. So using manure as a nutrient source. The requirements for using manure efficiently is no different than those for commercial fertilizer. You need to know the nutrient content and availability of the manure. You have to get your manure tested. Know the nutrient status of the soil. So there again, we're looking at your crop removal rates, your cation exchange capacity, what your readings are currently on your soil. And then you want to apply uniformly at the correct rate in a timely fashion. The great thing about using manure is that it can eliminate, reduce, or even supplement other nutrient sources. So we all know there's a good cost with commercial fertilizers. So manure definitely has value. You want to incorporate the manure to reduce nutrient loss or nuisance factors such as odor, and utilize conservation practices to protect water and land resources. So, you know, applying it into heavy stubble, like corn stalks, wheat stubble, or even into a cover crop situation would be best. So again, knowing the nutrient content of the manure is critical. The sample must be taken to have analyzed, and you want to know the phosphorus and potassium levels and the nitrogen availability. Because manure obviously is an organic nitrogen. It has to be mineralized to be converted into a form that the plant can uptake. So there has to be some converting done there on your organic end to what's actually going to be available for plant uptake. And also if you make any sort of a change, so this needs to be done probably annually, have your manure sampled. But if you make any sort of changes to the feeding, the different type of feed or water or a different housing situation, you want to have your manure reanalyzed because that can change the nutrient load in the manure. So nutrient mineralization, we talked about that from applied manure, depends on different things. You're looking at temperature, soil moisture, soil properties, because this all takes into effect your what we like to call soil livestock. Those are all the microbes and little animals that are in the soil that are doing that conversion for you. So that all, if the soil's too wet and anaerobic, they're not doing too well. If it's too cold, they're not moving. If your soils have, depending on the clay and sand properties, all takes into account the microbial or soil livestock activity that we want to look at doing on the mineralization. So this is a table here. This is actually from Iowa State that looks at the pounds of nutrient on average per 1,000 gallon of liquid hog manure through a confinement feeding operation. So you can see there kind of where the average is, min max, on the levels there of actual nutrients in manure. You can see some of it's got some pretty good analysis there to be beneficial. This is that chart just blown up. So the manure nutrient concentrations in confined feeding operation swine pits. So I mentioned this earlier, there's kind of the difference between an organic and an inorganic fertilizer. Organic fertilizers contain only plant or animal-based materials that are either a byproduct or an end product of a naturally occurring process, such as manures, leaves, and compost. Inorganic fertilizers are synthetic, they're manufactured, and they contain minerals or synthetic chemicals as well, as an added issue. Typically, manures have more phosphorus than needed. Again, we look at, you know, the fields behind the barn where granddad and great granddad put a lot of manure. Those phosphorus levels are usually extremely high and are you know, way more than what the crop will remove. So we need to look at that when we're adding P or adding more manure to an area. You know, looks like here phosphorus is 3 to 5 times more than what the soil needed. So to avoid overloading phosphorus on soils, use manure at lower rates and supplement with nitrogen or apply manure only every 2 to 3 years to you know, mitigate that high phosphorus level in the soil. So applying the right rate, what is necessary? Again, looking at the Tri-State Guide, recommends not adding if soil test values are 40. So that's 40 parts per million. That's 80 pounds per acre. So on a Bray 1 rating. So yeah, obviously, if they're at that high, we looked at the crop removal rate earlier at a 200 bushel yield is a 70 pound removal. So obviously this makes sense that you don't need to add if you have a greater than 40 parts per million. Phosphorus losses increase as the P levels are greater than 130. So you definitely you're adding way more than what the soil can take, than what the crop's going to use. It just increases the chance of off-target movement. So you definitely want to calibrate your applicators to make sure that they're applying the right amount. Starter fertilizers, no more than 100 pounds of N per acre. Let's see, year 2 fertilizer programs to save time and trip over field consider higher dissolved forms of phosphorus. It's at risk for leaving the field if intense rainfall follows broadcast application. So in ideal conditions, you know, the drier, so the soils aren't saturated. You want to make sure when you're applying it that you, obviously if you can drive across the field safely, it's probably dry enough to apply, but that's definitely one thing you want to take into consideration. So we talked about the rate. Now let's look at the source, the sources of phosphorus. First, understanding the amount of phosphorus available. So we're looking here at what the percent of P that is water soluble in the different types of manure. So you got dairy cattle, swine, confined swine, and broiler or chicken houses. And then you look at inorganics, your MAP, your DAP, triple superphosphate, and starter, looking at what the phosphorus levels are in each of those. Apply the right source. Organic manures, they're less soluble than commercial fertilizer. Obviously, they're in a natural organic form, so they're not mineralized yet, so they're not as soluble as a commercial fertilizer. follow the soil tests and next year's crop needs to make sure you're looking at the right type of manure. And again, or incorporate it to prevent the loss of P due to runoff. Also, you can look at in-losses through gas. So you got to look at different things here. So incorporating manure is definitely a benefit. Inorganic commercial fertilizers, again, here's what we're looking at. You've got your liquid forms, which are 28, 1030, or 28, 32, your dry forms, your MAP, your DAP, urea. Inorganic product contain 85 to 100% water soluble phosphorus. So there you go. When you're applying those, you definitely want to look at the weather conditions, soil moisture conditions, all those things that are going to add moisture to an already water soluble issue that can lead to off-target movement. So we talked about the source, let's talk about the timing of application. So recall that commercial fertilizers are approved for application to frozen ground. Manures are not. If you're looking at this, applying manure to fertilizer on snow-covered ground, as shown here in north central Indiana, greatly increases the amount of dissolved phosphorus that is lost after the snow melts. That's because the P is less able to bind to a soil particle. So it's applied to a snowy field. The ground's probably frozen underneath. The dissolved phosphorus doesn't have anything to bind to. It's probably going to run off as that snow melts. The timing of P is kind of interesting because it may not affect the crop yield. It's more an environmental impact thing. So you want to avoid the frozen ground, snow-covered ground, saturated soils, watching the weather so you make sure you're not applying before a heavy rain, anything that's going to, again, potentially cause that that nutrient to move off target. And you're looking, common sense tells you, if you apply now, you're basically as farthest away from when that crop is going to need that nutrient. I understand, you've got to get pits emptied, you've got to get barns cleaned out, and frozen ground is a great time to get across and get it done now in the winter. But from an environmental and crop utilization standpoint, you're as far away as possible from when that crop needs that nutrient. So it really gives it more time to be lost at this point. Again, P may not generally affect the final crop yield, but timing can significantly affect the environment. We're trying to keep that nutrient where we want it, when we need it, and not have off-target movement. The percentage of P that is water soluble and remains dissolved is most detrimental to water quality. Again, those inorganics that are more water soluble, they have more of a chance of moving off target when applied in proper conditions. Again, the right time, falls may look great. You're already doing farm operations. The price of fertilizer to prepay in the fall might be great. Availability is good. You can look at what next year's crop removal is going to be, but does it really make sense to apply nutrients in the fall that can move off target? Application methods, so you're looking at incorporating, rebroadcasting, injecting. What are we looking at here to apply this material? And then spring best practices is the best for crop production, broadcast, in-row, liquid, and then pesticides. We're doing more and more trials here locally, and as you move east with side dressing manure. And that is showing some tremendous yield benefits. There's a timing in there. You've got to do it before the fourth leaf stage, because obviously once you get to the fifth leaf stage, the growing point's becoming above the ground, and the hoses, if they knock the corn over, has less of a chance of it standing back up. But we've seen some tremendous results in a 1 and 2 year basis. So we don't have it's not a proven practice, but we're seeing some tremendous yield results from side dressing manure. You're putting it on there right when the crop is going to be needing it, and with very minimal damage to the stand itself. That works into the summer application. And also a great time between the crop rotation with wheat or oats, and you're also going to go back in after that with some cover to keep that stubble covered through the winter till the next spring. That's a great time to look at applying some, basically any sort of a fertilizer, either organic or inorganic. Additionally, research indicates a significant reduction in dissolved phosphorus due to longer time to be fixed to the soil. So it's saying that if you go into that time when the soil's a little drier and you've got some cover there that keeps that phosphorus in place longer and gives it more of a time to adhere to a soil particle. So I've talked about rate, source, time. Now we'll look through placement pretty quickly here. This is so Dr. Vine from Purdue, Tony Vine, put this together. This is looking at the depth. So this shows the soil availability phosphorus concentrations in the center of the corn rows following planting at 3 depths with different phosphorus timing and placement techniques. A rate of 60 pounds of P2O5 per acre was applied as the Mosaic Company's microessential to high organic matter silt loam soils. 8 to 0 inch soil test P levels were 20.5 parts per million or 41 pounds. In West Lafayette, the broadcast P, let's see here, mouse. Broadcast P was non-incorporated. Zone banded placement was done with a culture-based strip till system. You want to look at the different P values from the 2 to 4, then 0 to 2, and 4 to 8 inches. So you can see here the way that they applied it versus the amount of phosphorus, at the depths. Again, right placement choices, timing, environment, management, solubility of P. So this is again another looking at the different types of tillage and the P values at 0 to 4 and 4 to 8 inches. The distribution of soil available phosphorus concentrations after 40 years of different tillage systems with equal post-harvest broadcast P2O5 application. This was done on a drummer silty clay loam. 0 to 8 inch soil test levels was 58 parts per million in West Lafayette. So that kind of gives you an idea. Looking at different different tillage practices. Obviously, you can see the higher amounts, in a no-till system at the top, at the 0 to 4 inch, versus a plow. You're looking at a higher level at the 4 to 8 inch. Apply the right placement, surface broadcast placement, incorporated placement, deep band, so down below the root zone, placing with the planter, so like a 2x2 type situation, or even with the cover crops. You can definitely, anything you can do to keep that nutrient in the soil longer in place, giving it more of time to adhere to a soil particle and make sure that it's not gonna, and keeping the soil particle itself in place is great for the cover crops, making sure that you keep that phosphorus where you put it. So some factors that affect phosphorus and runoff and erosion. Excessive phosphorus amounts are subject to loss of soil P levels of the surface to 1 to 2 inches down. So that's generally where your erosion occurs most. If your soil's moving the most, if you don't have any sort of a cover or residue there, that top 2 inches is the best chance of soil movement, thus taking your nutrient with you. The amount of manure, fertilizer, P on the soil surface, looking back at more of a injection or incorporating shortly, with the applicator or shortly after, best chance of keeping that phosphorus where it needs to be. The likelihood of transport from field to water, it plays a lot of different geographic things take place here. So your soil type, again, your cation exchange capacity, your soil particles, if you're looking at a sand, silt, clay, whatever, how much that's going to move, the slope. Obviously, if you've got a lot of hills, it's more apt to water running down. Then your residue cover. So if you're looking at no-till, keeping that soil in place is a much better option to minimize the chance of that nutrient moving into the water. Rainfall intensity and duration. You know, in the past, we've seen it feels like that our rains are becoming more intense. We're getting more in a shorter period of time. So taking that into consideration when you're applying any sort of organic or inorganic fertilizer, you need to look at the forecast and see what is coming down the pike shortly to make sure, you know, if you put that nutrient on, it's going to stay there. The distance to water. So you want to take into consideration how far, if you're applying it, how far you are from an open ditch or a pond or even a lake, how quickly that nutrient could move into that water body. And then also conservation practices. So grass waterways, wasp cobs, any sort of conservation practice that holds soil in place, slows down water movement, is great to keep those nutrients in place. It helps filter those out and helps filter the soil, which is holding the phosphorus and any nutrient to help keep that nutrient in place and the soil. So manure, potassium, K, manure values are of K are low, lower K values. So now we're talking about potassium. It remains water soluble and is easily returned to soil. Availability of manure potassium is considered equivalent to commercial fertilizer potassium. So we'll talk a little bit about some rules and regulations. Just have some basic common sense here. So the Indiana State Chemist's Office regulations do not replace any of the Indiana Department of Environmental Management manure regulations, permitting, spill reporting, or other water quality standards. So as we know that it breaks down, the governing body breaks down to IDEM, and then the State Chemist's Office manages to IDEM. So it all starts, it's a kind of a trickle down management there. So why are we regulating nutrients? We talked about this at the beginning. We want to try to do this on our own before we're mandated to do it. Mandating it comes with costs, and I'm pretty sure that those costs are going to be not going to come out of any sort of government budget. Those are going to be handed right down to the producer. So we want to try to do this on our own. So here's a picture of the nitrogen loads. I mean, we've heard the stories and we've seen these before, but you look at the hypoxia zone in the Gulf of Mexico, the Lake Erie Basin, the Chesapeake Bay. This is a nitrogen applied, and we want to try to make sure we're doing this in a more holistic manner. The phosphorus level, here you can see we get down, there's a lot of areas where 120 to 540 kilograms are put on per year. And you can see that there's a reason that I think we're seeing a lot of off-target movement. We're not being smart with what we're putting on, how much we're putting it on, when we're putting it on, and we need to start taking that into consideration. So what is a fertilizer material? What's the definition? Basically, it's any substance containing nitrogen, phosphate, potash, or any other plant nutrient, including anhydrous ammonia. And again, there's two types. There's our inorganic, which are your commercial fertilizers, and then the organic, which are manure, compost, even DDGs, that's dried distiller grains, with the exceptions of lime, gypsum, and biosolids. So who's exempt from standards? Any person distributing or using less than 10 cubic yards or 4,000 gallons of any type of fertilizer material in a calendar year. Well, 4,000 gallons, a lot of your liquid applicators out there today are 6,000 to 8,000 gallons. So in one pass, they're out. They are now not exempt. So we'll look at what is that. So 10 cubic yards of manure per year is produced by 2 sows, 10 finishing hogs, 1 steer, 1 dairy cow, 7 sheep, a horse, 240 layers, 212 broilers, 82 turkeys, and 118 ducks. So this is from IDEM. So if you have any more than what this says, then you need to look at the fertilizer rules for application. So just a quick review of the fertilizer certification rule. It's a person who applies or transports commercial fertilizer material for hire. Persons who apply or transport manure from the following: Indiana regulated confined feeding operations, or operations outside of Indiana that would be confined feeding operations if they were located in Indiana. So this is who needs to look at being certified through fertilizer and manure. And it's applicable to any person applying fertilizer material, both commercial and manure, for hire. Must have a commercial fertilizer applicator license and be working for a licensed commercial fertilizer business. Number 2, any person applying manure from a confined feeding operation on any property must be certified. Includes manure from confined feeding operation size facilities out of state. So let's look at some of the records, some of the things you need to have to do this. A confined feeding operation manure required records for distributors or sellers. Applicator must have a Category 14 certification to obtain manure from a confined feeding operation. And it should include your name, certification number, the amount sold, the analysis of the fertilizer, and the date you took delivery of it. The records need to be kept for 2 years. It's very similar to a private applicator record keeping requirements and for REP or restricted use pesticides. And you must have these records available should an Indiana State Chemist's Office representative request them for investigation. So the Category 14 certification, who does it apply to? Those who apply, handle, and transport third-party delivery to co-op is exempt. Delivery to end user isn't exempt from certification. Card on the left is a private applicator, Category 14 fertilizer only card, and they cannot purchase restricted use pesticides. Card on the right is a private pesticide applicator permit with the Category 14, so they can purchase restricted use pesticides and are certified to work with fertilizer and manures on a commercial level. So let's look at fertilizer material use, distribution, and record keeping. We'll get into a few more details here. So what's the plan? What does this require? The plan is required by everyone who applies fertilizer materials, inorganic, commercial, and manure organic, certified and not certified. Both manure and inorganic fertilizers you buy from your ag retailer distributor, liquid or solid fertilizers included, as well as anhydrous ammonia. Rule does not really specify what is in the plan, except to mention how fertilizer rates are determined. So you want to look at graphs, think paragraphs, not a plan. Maybe manure sample or standard replacement values, of 1.2 pounds per bushel of corn removed, soil sampling, and the tri-state fertilizer recommendation. Yield records should all be included when you're looking at your plan. Confined feeding operation is required to have manure analysis. Non-confined feeding operation does not. Recommended, having the analysis, a fertilizer plan is the grower's defense against unpreventable acts of nature. So you want to make sure you have this, at least have a plan laid out. So if there is some sort of a storm, flood, some kind of a disaster, you can at least have a plan ready, in place. This is a neat little tool I just wanted to throw in here. This is through Iowa State, and this is a calculator to look at your maximum return to nitrogen. You can put in some parameters, and it will give you the maximum based on where you live, your type of nitrogen source. It'll give you the rate that provides you the greatest return to your investment. And it looks a little different than this now, but it's still, the information's still the same. And you basically put in where you're located, your fertilizer type, the price per ton, and then it automatically calculates the price per pound of N, and you put in your corn price. Here's more what it looks like today. And then I had January, actually this was December 30th. We were looking at, I put in the prices. So anhydrous on December 30th, picked up locally, was $5.30 a ton. So I put that information in where I was located, and I hit calculate, and what I got was a graph like this. So, oh man, clicking around too much. So the nitrogen price per pound was 32 cents. I put in a $4 corn price, and it came out to my maximum return to nitrogen rate was 191 pounds. So anhydrous ammonia at 82% nitrogen, I had to apply 232 actual pounds of anhydrous to reach my maximum return. Just a great tool to look at when you're getting ready to plan for nitrogen application. Give you an idea on what your target should be. I know we always talk about 1 pound of N per 1 pound or 1 bushel of corn, maybe 1.2 ratio. This gives you a really nice picture, and you can play with the numbers based on corn price, or if you can, if you need to add N-Serve to your fertilizer, you can add that cost and play with a little bit about what your actual rate should be to get a return. So some staging rules take effect when you're looking at nitrogen. Staging is a temporary placement of a product in a pile in preparation of field application. The fertilizer material is meant to be used now rather than later. Fertilizer materials behind the barn are not defined as staging and are exempt from setbacks. So if you're, piling some manure out back of the barn there through the winter to small pile to get ready to spread later, that's not considered staging. But a quick side note on that is if that pile does cause runoff issues, so if it's close to some water and over time they can trace that back to that pile and contamination, then you could be subject to IDEM regulations. So just be cautious. So we're looking here, the following are significant new rules that now apply to everyone. Setbacks and standards have been used by IDEM and Natural Resources Conservation Service for years. So we've got new rules now to look at staging, timelines, covering, setbacks have all come into play here. So we need to take those into consideration. I've seen, more chicken litter piles around. Commercial fertilizers are pretty costly. I don't know that I see a lot of those in piles, but there's definitely some rules in place to look at those. So for inorganic fertilizers, so these are your commercial fertilizers, it's a more common sense approach. Looking at, you cannot place within 300 feet of surface waters, drainage inlets or risers in the field, water wells. You want to look at standing water you can't place it in a waterway or a floodplain. If it's sitting there for more than 72 hours, it needs to be covered, and it cannot be staged along a property line, and it must be applied within 30 days. So you've got to plan accordingly. If you're going to have it sit there longer than 72 hours, it's got to be covered, and anytime you place it, it needs to be applied within 30 days. So here was a staging for potash. They had to take delivery because of their price they were locked in at. And then they dumped it here, and they got 5 inches of rain. And off to the side here shows a waterway or a drainage ditch, an open ditch. So this is a real issue. You've got to think ahead when you're taking delivery of stuff like this. And like I said, maybe commercial fertilizer doesn't get piled too much, but if that was a pile of chicken litter, or something like that, you could still have the same problem. Like I said, we have these seems like more intense rains now, where we could end up with that running right into the water ditch there. So manure, organic, it has some staging restrictions. Do not place within 300 feet of surface water, drainage inlets, or water wells. Cannot place in standing water, a waterway or a floodplain. And then same thing, after 72 hours, the pile needs to be covered or have a berm built around it to keep nutrients from washing away. Manure staging, again, some more. You have to be 100 feet from a property line or a public road. So nobody wants a manure pile right next to their driveway or their property line. You have to be 400 feet from a residential building. It cannot be on the side of a hill, obviously, because it can run off. And manure has a little bit more grace period than commercial fertilizer. It has to be applied within 90 days. Versus a commercial fertilizer. So get a little bit more grace period there. So manure, you're looking at a civil penalty or fine if you break some of these rules. These setback standards will be used by the state chemist's office to handle complaints. And it looks at all manure staging piles. So fertilizer material application, now we're looking at some application restrictions. You cannot apply directly to water. So obviously if you've got ponds or some sort of water open ditch around your field, you need to make sure you're setting back from that. You cannot be applied from a public road, so you can't park your setup on the road and use like a spigot gun to apply fertilizer or apply anything from the road. It has to be applied right to the point, and cannot be applied to saturated ground. Obviously, we talked about water, and the off-target movement of material in wet soils. General rule of thumb: if you can get in the field, without mudding things up and causing a lot of compaction, then it's not saturated. There's no other application restrictions really for inorganic. So here are some of the setback requirements. If you're looking at inorganic manure, liquid as a single pass incorporated, or if you're looking at incorporated within 24 hours, you want to have these setbacks. I thought it was interesting, that property lines are 0 feet or 10 feet if you're within 24 hours. But that's, I thought that was kind of interesting. I would think property lines would be a little bit farther, but that's what the rule is. So manure organic, now we're looking at with some slope and also water wells, surface water, sinkholes, those kind of things you got to set back from when applying manure. Okay, manure, let's see. So you're looking at highly erodible lands. You want to make sure if you're on some sort of erodible soils, you have at least a 40% crop residue or some sort of a cover crop, you know, to help hold that manure in place if it's on a slope. Again, applying to frozen or snow-covered ground. A confined feeding operation, IDEM permitted facility cannot apply manure to frozen ground unless special permission is granted by IDEM. Again, here we're looking at organic manures to frozen or snow-covered ground. Manure obtained from all sources can apply to frozen ground in the following circumstances. If the equipment can inject or incorporate the same day, then you can apply. Here we're looking at, we've got some application issues here. Probably shouldn't apply if we can't get the tool to go into the ground. Here we're looking at organic manures, application to frozen or snow-covered ground cannot apply within 200 feet of surface water, cannot apply in a floodway. So can only represent up to 50% of the next crop. So if you need to, if you want 250 pounds of nitrogen, you can only apply 125 pounds. You can only do a half rate, and you cannot do it on a slope greater than 2% unless you have some sort of a cover crop or residue greater than 40%. Again, so we talked a little bit about this. You just want to monitor your requirements. So looking at the soil conditions, your forecast, you want to look at, you know, basically you're looking at your tile outlets, surface water channels for change of color, flow or volume, make sure you didn't get anything close to those. And if there is, stop the application and apply it later or move somewhere else to apply. And then record keeping, you're looking at category 14, private applicators. You want to keep them for 2 years, and a commercial company can maintain records for their customers. So if you're buying manure from somebody, they can maintain those records. Here's just a quick sample of what a record chart might look like. And with that, I've got some examples, but I think I am out of time, so I will hang it up there and turn it back over to Austin.
Thank you, Adam, for your time this morning. I think you did a good job with the comprehensive talk about the 4 R's here. Amanda, do we have any questions in the chat that need to be addressed?
Yes, we did have a couple of questions. So the first question is, if 200 bushel corn requires over 100 pounds of P2O5 between the grain and the stover, and 40 parts per million equals 80 pounds, where does the extra phosphorus come from?
And I want to read through that again.
Yeah, it's up just a little ways. It's basically the third comment down in the chat.
200 bushel corn requires over 100 pounds P2O5 between the grain and stover. I guess I'm not really understanding the question, why they're, if there's 200 bushel corn requires over 100 pounds. because we're removing 0.35 from the crop. So or 0.35 pounds per bushel is being removed by the crop. So, and then your soil test is at 40 parts per million. So the difference would be what you've applied as fertilizers or what's already there. Would be what's there from previous applications, as if I'm reading that correctly.
Adam, I think you are reading that correctly, and I've been texting with John here, and John, if you wanted to weigh in on that too, that, I mean, it would be what was applied. So, okay.
Okay, and then just the one question below that, but does starter fertilizer have a positive ROI or return on investment? They haven't used it in the past 3 years with good results. So what's your opinion on that, Adam?
So Purdue's done a lot of testing with starter, and we haven't seen much, from what I understand the results, the yields haven't proven to be of effective ROI, but it definitely gets the plant out of the ground and gets going, and it basically can split up your application a little bit. You don't have to use as much later because it's taken it on earlier. I think definitely lots of people are moving more towards starters now, or seeing more earlier plant health and earlier vigor, getting those plants up out of the ground. I think that starter is a great thing that we're starting to see more and more use of.
All right, I'm not seeing any additional questions here for Adam. Adam, thank you again for your time this morning. Adam is a certified crop advisor, so he does know somewhat of what he's talking about. So I think he did a good job there. And now we've got another certified crop advisor coming on board to finish out our morning here. It's John Scott. John Scott is the digital ag coordinator for Purdue Extension on campus. John has been working a lot with drones, and Adam and I have been working quite a bit with him on that program. We've flown for Infield Advantage. It's a statewide program run through ISDA, and just kind of been flying drones past few years, and so I think we're going to go ahead and turn this over to John. So John, if you could go ahead and sharing your screen. And we'll get transitioned into this next presentation.
Great, thanks, Austin. Can you guys see my screen?
Yes, sir.
Awesome. I'm gonna go ahead and push play and we'll get going. Like I said, I'm John Scott, but I've got a video here for you all. I've actually got two. We'll play the first one here, and we'll go from there. Hello, welcome to Digital Tools for Crop Management. I'm John Scott, the coordinator for digital agriculture with Purdue Extension and the Wabash Heartland Innovation Network. First of all, I want to talk about this graphic showing the A&R educators in the drone program. So each of these little dots here shows an educator who has a drone or a UAV and is certified to use it. I myself work in Tipton County in the surrounding county. My counterpart, Mark Carter, covers the rest of the state. I also want to mention the Purdue Extension UAV website. Here's the URL for that. There's a lot of good information on there about how you can use UAVs in ag. It's not all just corn and soybeans. There is, as you can see here, I think 4 just corn and soybeans. But we look at multiple uses for this technology. And I also want to point you out, if you're interested, to a couple of Purdue Digital Ag websites. There's this one here, which is the College of Agriculture Digital Ag website, which just kind of showcases some of the highlights of what we're doing. And if you want to really kind of dive into some of the more specifics, this Digital Ag Resources is a really great tool as well. So to start off here, I want to talk about stand counts. I want to talk about using a UAV to get stand counts. So last couple of years, I've worked with a company in Central Indiana, Popcorn Company, and we've been looking at getting stand counts for some of their research. So as you can see here, we've got this popcorn that's in V2. It's about, and this picture was taken about 30 feet above ground level. So you can see the detail of each of these images. This here area that's circled is a part that we'll look at here in just a minute. Here is from 2020. This is again V2 popcorn, and this is 50 feet above ground level. If you look a little bit closer, you can see some of the green in there. Here's some green, and this is actually a plot gap, and then here's some more. So you can see those individual plants here. And again, this is around that V2 stage. The reason with stain counts, you want to get so early, you get V3, V4, and the leaves start touching, the software, the algorithms cannot pull those apart there. It makes it difficult, if not impossible, to do stain counts. Here's that first picture, and this is showing each of the counts. So where the red lines are is where the computer said, hey, here's a plant, here's a plant, here's a plant. And then the results of that. We've got the area, the popcorn, the growth stage, the area that was selected, what it was, and for the plot, and then how many counts. So 65 plants in this case, and this is a research plot. So they were around 64, I think, thousand what they planned. We got 65. So we were right in there with what they had as a manual count, which was really exciting to see what we can do with the technology, and then we repeat that again this year, and we're in those same margins. So I think we're heading in the right direction with technology, but still it's very selective as far as how big of an area we can cover. So that'd be the next phase, is how do we cover more ground than what we are currently doing. Plant population, this was a study we did in Carroll County in 2020. This is just a strip trial. It was 120 acres what covered. There were 4 seeding rates. So there was 50, 90, 140, and 180,000 plants per acre, or seeding rate per acre for soybeans. There was one seeding rate that was around 45,000, and that was just they had a gap and wanted to see how low the planter could go, how low it could physically go. The main seeding rates, so that 50, 90, 140, 180 were replicated 3 times. There were 3 different varieties in the field. There were about 4 soil types. And the field was split in half, and half of that field was given a fungicide, insecticide, nutrient mixture on all 3, and the whole field was treated with herbicide. So that's kind of the background of what's going on. There was a lot of stuff going on to unpack here, but what I really wanted to look at was say, okay, what can the drone do? What can we do from the air to look at these different populations? So we're looking here, this is on 6/5. So the thing was planted May 25th, was when the field was planted. So just a couple weeks after planting, and if you look at this image here, you can already see some of the green showing up on some of these higher populations. And this is the RGB. This is a variance. This is just, we'll talk more about it later, but this is just a color and picture, a plant health image, if you will, based off of this image here. There's no NDVI or NDRE with fancy sensors. It's all used just a visual camera. But you can already see 2 weeks after planting, we've got variation, and this is a higher population. This area is a higher population. Here's some higher population. So we're seeing those things already start to tease out. Majority of my time was spent on this half the field on scouts. This was a 50,000, it's 180, 140, 90, and then this was at 45, 40 there. So 6/18, just a couple of weeks after that, we're seeing it starting to fill in like we would expect. If you notice these lines going north and south here, going up and down, that's the herbicide pass. So what we'd expect to see, they ran that perpendicular to the populations. 7/23, so about a month after that, we're still seeing these things. And this was right after they did the second pass with the fungicide, with the second part, that R3 pass. And then we've got the end of July, a week roughly after that. What was interesting to me is this is the site that was treated, and then actually you can see that line, that center line there. And this side was looking worse, but I think that was just a little bit of burning, or maybe some bronzing from some of the nutrient package that was applied. And when we look at it a couple weeks after that, we actually start seeing the other trend, where this is a little bit greener. Again, here's that line, you can see it. And the side to the left here is a little bit greener in some of these areas than what we're seeing on this side. Slight changes, not much yet. The end of August, this is what we're starting to see. We actually had SDS coming into the field. This is also some soil type stuff. So we saw SDS really buy with some of the higher points coming in late, partially probably because of some of the drought. But we're seeing these same trends. Again, there's that center line here, and you can see it here. And then a couple weeks after that, so that 9/11, we're starting to get a lot of senescence. Some of these things where the SDS hit have already matured and then got into R8, but you can still see there's that center line, which the stuff to the left and to the right, we're seeing that. And we're also still seeing some of the differences in populations where those populations were at. Now it's starting to drop off, but we are seeing them. So most of the season, it was possible to see the different planting populations, and that was really as early as 2 weeks after planting. And then now we kind of carried that throughout the growing season. And it was also possible to tease out the different varieties. There were, like I said, there were 3 different varieties in this field, so you can kind of pull those out as well. It did appear that the late season application did improve stay green in the treated beans when looking at the varieties within their population bank. So that's looking at the field from the east to the west within a specific population for that variety. I will say in the low population environments, the late season treatment did profitably improve yield for the producer. He and I had talked about that it made sense in the lower populations because it was able to push the yields up. And I think the reason is every plant counted at that point in time. Every single plant had to deliver in order to have yields that it got. Whereas with the other lower populations, if they didn't have that, those plants, if they got disease or had some pressure, there wasn't enough plants out there to make up for the lack. So you either bought the seed and paid for the seed and put the chemical on, or you put the seed out there and the chemical may or may not be effective or economic, be profitable. Lastly, given the in-season results and yields, the grower is considering reducing his soybean seeding rates for the 2021 growing season. Because from what we saw, that 90 to 140 somewhere there was still the sweet spot. That's where he was at with those two, which kind of really goes right into what Dr. Castile says when he talks about soybean seeding rates being in that 110, 120. And then, sometimes you can go a little bit lower in some of those cases, or if you have lower stands, it's not worth going out and replanting. So it's what we would expect to see. However, this is all in 1 year. We just did this in 2020 here, so we need to repeat it to see if the results can be replicated. It is interesting to me, though, so far that those low population varieties with the treatment, it still ended up being more profitable. That was really exciting to see. Hopefully we can repeat that. Talking about some disease, a couple of disease treatments. We've got this SDS field trial. This was done in Benton County, Indiana in August 2020, beginning of August specifically. There were 3 treatments in this field. There was VSF, Ilevo, Syngenta Saltro, and then no treatment as well. There were 3 replicants, just a quick little strip trial. If you look where these blue arrows are pointing, you can see the lighter colored beans here. And this is the very, you can see those red areas, and it kind of pops in the EDI. You can see those plots with no treatments. There wasn't really visual difference that I saw between the Ilevo and the Saltro in this case. I don't know what the yields on this were either, but just when we look at it through the drone, look at it visually, that's what we're seeing. So the untreated, you definitely saw it. There was not heavy SDS pressure in this particular field, but there was some out there. We did walk it, and there was definitely some SDS pressure in the untreated stuff, but we didn't see much to speak of in the other 2. I do want to talk about this plant health index. I want to talk about some of the indices. We'll get into what they are. We've talked about it a little bit already. You've probably heard me throw around terms RGB, Vary, NDVI, or NDRE. Those are the 4 I can do. We'll talk about what those actually are here in just a few slides. But I want to show you popcorn and the soybean examples from the last couple of years where we've looked at some of these, when we've looked at these indices. I want to talk about it because the indices themselves are great, but in order to get an NDVI or an NDRE or a GNDVI or any of those types, you have to buy more expensive sensors on top of the drone and the camera and everything else. And there's an additional cost. So the question is the cost actually worth it or not? In this particular case, we've got this popcorn field trial. So here's an RGB and a vary right next to it, and below that's the NDVI and DRE. So just to kind of give you perspective. The RGB and the vary, these two images right here, come from just a regular Phantom 4 Pro camera, what you would purchase whenever you buy that particular machine. These two maps on here, the NDVI and DRE, came from the Centera double 4K. So that's an additional cost. That sensor, last I checked, was around $3,000 just for the sensor. And that would be on top of the drone itself, which by the time it's all said and done, you're looking at 2 to 3K. So you're looking at probably 5 to 6K to capture a set of images like this. The benefit is these images will all capture the exact same time. So RGB is red, green, blue. That's your visual camera, good old-fashioned digital camera. Vary stands for visible atmospherically resistant index, and that's this map. And it operates on the premise that planets are green, and they reflect the green light back very strongly. But they also reflect a little bit of red and a little bit of blue. And we know how much red and blue they reflect. And since we know these things, we can calculate that. The computers can calculate for us an algorithm, and it gives a color map, which is what this is. NDVI is normalized difference vegetative index. It uses red light, so visible red, and then near infrared, which is actually not visible to the human eye. It's outside of the visible spectrum. This is kind of the gold standard of remote sensing. The reason being it's one of the oldest indexes, plant health indexes out there. This was developed in the 1970s, I want to say, out of NASA using some of the original Landsat data. They actually developed it using trees. So it just has, that's what the scientists in charge found, that red and near infrared and the algorithm we put them together in gave the best ratio really back, and they call it NDVI. And then there's NDRE, which is the exact same thing. It's normalized difference vegetative index red edge. So it's the exact same as the NDVI. It's the same algorithm. It just uses red edge instead of red. And red edge, all that is, it's still in the red spectrum, but it's the last little bit of red spectrum, right between visible and invisible light. And then it also uses near infrared. So that's kind of the science of it all. But to kind of break it down, you guys can see this is a popcorn field. In this particular field, it was split in half. It's a split field. This half was side dressed with swine manure at B4 from the popcorn. This side had swine manure planted full. It both had star 28. But that's the only difference. Everything else, the population, everything else was the same in this particular field. So if you look at the RGB, you can see the color here versus here. So this is a much greener, deeper green, healthier looking plants than what we saw on the untreated side. The vary, in this particular instance, we've got some red over here. And if you look real close, you can see it's a lighter color. I'm not 100% sure why that is. In this case, it's an issue with the camera, probably a sensor or a setting in that camera, and that's what threw it all. Keep in mind that this image is based off of this. So what you see here will be reflected on this image quite a bit. But you still see that green showing up like you would expect. And then we've got the NDVI and the NDRE. Again, we're seeing what we would expect to see, right? We've got this deep green on this side, deep green here. We can see those lines through where they actually applied the manure. And then on the left, we have these redder colors, like we would expect to see with this lighter color. So everything that we're seeing here is correct. I'm not seeing huge issues. The only one being the vary. That would be something that you would definitely want to question. But again, if you look here, it looks a little, just a shade lighter here than what it does throughout the rest. Is that real? No, and not in this case. And that's one of the drawbacks for remote sensing. It's not real. It's just a trick of the camera. Again, probably a setting issue. So that's some of the corn. This is a soybean field, and this is, I'm bringing in that soybean field we just talked about. So this set of imagery is from the 18th of June in 2020. So here's your RGB, It's your vary, NDVI, and NDRE. So we can see those same kind of things. We've got, this is right after the herbicide application. If you look here, you can see that on the RGB, but it really starts popping in this vary, the herbicide application tracks. See a little bit in the NDVI, and it's kind of washed out really in the NDRE, which was concerning. In this case, you know, the same trends are what we're seeing now. We've got this big dark band, that's the low population. We're seeing it here and here. It's the same one we see here. We have a lot of soil. You've got that greener color right here. We've got a little bit of soil coming through. We're seeing that trend here. And even here on a big scale, you're seeing it, but you're definitely not losing the definition right now for some reason with the NDRE and the soybeans. Whereas here, you've got the same definition you have here. And then 826, so that same field toward the end of the growing season. This is late August. We've got that SDS, like we talked about earlier, coming through, and definitely some soil type differences. And we're seeing that on the RGB image for sure. It's definitely popping here in the vary. And we're also seeing it to a degree. I would say that to me, I don't have the same definition on this one that I do on this one. And this one I think matches more closely with what I'm actually seeing with from the sky. And the NDRE, we're just kind of getting general trends of what's going on for the soybeans specifically. I like that a lot better with the corn. Hopefully next year we can do some more work with some of these in field corn in addition to popcorn. And I showed these things to you all because I want you to see how these different indices work and what you can kind of visually see from the air. The question to you really is it worth it to buy the additional sensors to get these two maps or not? Can you get by with an RGB in a vary and still make very good decisions based on that imagery you're seeing? That's a personal decision. Some of you could say, hey, you know, I like the definition from some of these other maps. I like having those indexes. I want an NDVI map. There's nothing wrong with that. Or, you know, hey, my provider sends me an NDVI map, and that's what I use because that's what's available to me. There's nothing wrong with that. But if you choose to go out and purchase a UAV and fly it, or you have an agronomist fly it for you, I don't know that it would necessarily be worth spending your own money to buy additional sensors, at least right out of the gate. And it may or may not be beneficial to pay more money for those additional maps as a service. Talking about weather stations, that's been a big push, at least in the region that I work in the wind region. I want to kind of briefly hit on some of the weather stations. So this is an example of a weather station. You can see wind here, the logo, this is a weatherhead. This is what this is. Inside here, you can do temperature, humidity, and pressure. Here's the rain bucket where it actually collects. It's got a teeter totter in there. And you've got your weather vane, your anemometer, your wind vane is what it is. With cups for wind speed and this the wind direction. And this device right here is actually the communication hub. So that collects all that data and then wirelessly transmits it to the brain, which we'll take a look at right now. So this is all the above ground parts of that weather station. We just briefly talked about the weatherhead, but there's the control base for the weatherhead. This right here is the communication device. So it's got a cellular modem in it, a big battery in the cellular modem. These are all, right now they're all cellular, 3G, I believe. But this is the communication device. So this is what we call a brain that actually transmits the data from the weather station to the cloud cellular. And then down here you've got this receiver as well, same as this one basically, but this handles the underground sensors. So soil moisture and temperature feeds into this little device, and that also transmits wirelessly via that antenna right there to the brain. So that's kind of how that works. If you see these as you're driving through the countryside, that's what they are. That's how they work. Here's the data we can collect with them. So we can do temperature, humidity, pressure, solar radiation, precipitation, and then wind speed, direction, and gusts. That's all up on that weatherhead on top of the pole. Those poles are 8 to 10 feet off the ground, usually around 8. And then we can also do soil moisture and temperature. Most of the ones that we set up in the wind region, we have 4 different depths. That's 2, 5, 10, and 15 inches deep for both of those. And the uses, on top of the usual, it's just good to know how much it rained and how warm it is. We can get data on soil moisture and temperature for planting decisions, and nutrient losses in the growing season, the wind speed or direction and temperature for spraying decisions, solar radiation, how sunny was it over the course of the growing season. That maybe explain some of why we're seeing yield of the photosynthetic availability of the sunshine, really. And then humidity and temperature, both day and night, for disease pressure and things like that. And then that's just kind of scratches the surface on some of the uses. And if you can dream it, you can kind of figure out how do we want to play ball with this and what can we use it for. Nitrate sensors, so these NO3 sensors that they developed on campus. Now, nitrate sensors, they exist. It's not anything new. Here's a picture of it right here. This device, though, is different than the commercially available because it's mostly 3D printed. And it costs a fraction of what it costs to get a commercial type sensor. So that's what they're trying to do is, can we get a sensor that can report at the same level of a commercial grade sensor at a much cheaper price point. So right now they're basically, the ones they have in the field, they're just putting in water. This is a sensor in the tile outlet. So here's the sensor in the tile outlet. If you look down here, you can see a sensor placed in the tree to measure the base load of the tree as well. And these wires coming up here go to this doodad. This is a box. Inside that box is the brain for these sets of sensors. So this device actually collects the electronic signals from the sensors, and then it broadcasts it wirelessly to a receiver nearby that has an internet connection. And we'll take a look at the receiver here in just a second. But if it's within a mile or two, we get in a fairly clear line of sight, it can be broadcast. And here is an example. This is actually a computer, really, that collects data from the box via this antenna, and then it pushes it up to the cloud where that data is fed through. At this point, it definitely needs a wireless connection, an internet connection. This uses Wi-Fi to upload the data. And then that data is actually can be viewed at this URL, this website, if you wanted to check it out for whatever reason. In addition to the nitrate sensors, other sensors have been deployed to track humidity, temperature, soil temperature, and soil conductivity. So they're taking a look at a couple of different things just to kind of see, hey, what can we do with them? It's all using the exact same 3D technology, thin film type stuff, but you got little wires running through film. Really cutting edge stuff, and it's trying to get these sensors. How do we make these sensors cheaper than what they currently are, and still as effective as the commercially available ones? So currently, they are deployed in Tipton County pilots for testing. The ones that are out of the lab, they're still doing a lot of testing in the lab. But these nitrate sensors are in Tipton County right now. If you look down here at this draft, we've got this device, and there's 2 different nitrate sensors. That's actually what you also saw a picture of. And you can see some of the readings that it's showing us. I will say this is initial data. It's still being analyzed. They're still trying to work the bugs out, figure out, okay, where are we at? What's the load? And what's the data we're collecting really mean? And how do we make sense of it all? So still in development, but they do know, and I talk with them, and they see some of them have been, especially some of these down in here, were because they got dry. And so some of the readings they were seeing, questions, they went out there, and it was the tile dried up. And so they weren't getting the good data. So they're going to be going back and reassessing and seeing what they need to do from there on. Next up, we've got grain cart automation. This is an interesting one. So the person in the combine here is actually controlling the grain cart, the tractor and the grain cart. They're dumping right now. Here in a minute, you'll see them full forward. So the person in the combine said, okay, and they nudged them forward so they can have an even dump. And I'll nudge you again here in just a second. As they keep going. So they went, so another nudge forward, to get that even distribution. This is some work being done through ABE at Purdue, and it's pretty neat stuff. I mean, we're trying to figure out how do we adapt these things. Agricultural applications, digital ag apps. These are, phone apps, computer apps, things like that. What we did here in the last year, we sat down and said, okay, what are some apps that are out there? That was a big question from some of the ABE folks. What apps are out there? What do we need? And a lot of times it's like, well, I've never heard of this one or that one, but we didn't really know whether they existed or not. So we sat down and created this digital ag app database. Right now it contains over 500 agricultural applications, from iOS to Android to web-based stuff. It was created by the WIN interns and myself. And it includes information on what the app does, what it costs, who created it, and where to download it. And actually has links to go download it. If you look over here, you can see the different categories, just broad categories of what those apps are, and the number that are currently in the database. So the goal for this is to implement the database on a Purdue website so it can be used by the public for whatever they need, whether it's individuals who want to use it for their businesses or app developers when there's something out there so they can develop something more useful. That's what we're shooting for here. So it's really just a central repository for a lot of information. The app type breakdown, we look at it as web only, so no iOS or Android specific, is 22%, which I'm shocked that it was that high. iOS only is 18%, Android only is around 6%. iOS and Android 48%, which that didn't surprise me much. I was kind of a little bit surprised it wasn't higher. And that's just iOS and Android without a web-based component. And iOS, Android, and web is around 5%. The breakdown was 500 we got. So the overall synopsis of what we're seeing, there appear to be very few to no apps for vegetable or food production. Most specialty crops appear underrepresented. Corn and soybeans, there's a lot. Wheat as well. There's a lot out there from both industry and academia. And it seems fairly saturated as far as if you want to do something with an app or download an app, you kind of have to pick your litter. Most apps are free, but generally they're used to facilitate selling a product of some sort that the company makes money on, or they're optimized to work with a company's offering. Those are, I'm not surprised to see that. I wasn't when we started seeing it, but that's what we're noticing. And then AI, or really any smart process, seems to be still very limited. And any smart process could be basic. If I do this, it does that. It seems like there's a lot of heavy input to get it to do anything. So there's still some potential, definitely, in this market for different users. So with that, I'd like to thank these different groups, the Purdue Ag Centers, for letting me fly and work with them, Ivy Tech for some of the imagery as well, the Wabash Heartland Innovation Network, for the 10 counties I work in, and all the producers that I've been able to work with for all these different pictures.
All righty. I'm going to pull up the next one here, and we'll keep rolling. That's all right, Austin.
This presentation is using a UAV to scout a field. In this case, we're going to be talking about soybeans. I'm John Scott, the Extension Coordinator for Digital Agriculture with Purdue University and the Wabash Heartland Innovation Network. All right, so today what we're going to talk about is how I would go out and scout a field. Primarily one that would be the first time I've either scouted it ever or the first time that season. Kind of the process I go through when I'm rolling up on that. And that's scouting with a drone or a UAV. A lot of times during the growing season, I'll do the same practice every time I do fly that field, but it depends on number of constraints, time being the big one. Sometimes if it's something I'm just out there to look at real quick, I'll just take it up and do a quick flight. But for the first trip and a lot of subsequent trips, I like to map it first so I can kind of see what's going on, get a general feel for the field, and I can go back through and manually fly and scout. So today what we're going to talk about is drone deploy. which is this app right here. But the other options, this one right here is GGI Ground Station Pro, GS Pro, GSP. That's an option that works for flying. Another one that's good is Field Agent. That's by Centera. So that's another option. Then there are multiple options, more so than even these. So we're going to open up DJI. In this case, the drone's already connected. I have it on. I also am currently running Wi-Fi for this field, so we can work on setting it up. So I go ahead and load the field. So we're going to come here. Here's our field. I'm just going to go ahead and click and drag these coordinates in. So this one hasn't been flown before, but it's just laid in. I like to use the base map when I'm laying these out. It helps kind of get you an idea where the field boundaries, have been historically. Sometimes it's not 100%. You have to make adjustments when you do the flights over time, but it's usually pretty close. If you've made changes in your own field, then you're going to know about it. If it's a producer's field, then a lot of times they'll let people know that they have made some adjustments, and if they don't, you'll find out pretty quick where those adjustments have been made. That's probably good enough for now for this example. So you can see over here on the left-hand side, the map plan is what it's called. You can change the name of that. For the example, we'll just leave it. Then we've got our plan, basically. So it's going to take 15 minutes, 30 acres, 295 images roughly in one battery. By now it's flying at 200 feet. We can tweak that. I think we're going to, let's say 300. It didn't like that. It wants to go below that or below 200 just because of how small this field is. Switch to look at our VIN settings. If there's anything we want to change inside of there. In this case, we will change our site overlap. That'll work. So as you can see, it changed our site overlap. Our time is about the same. Obstacle avoidance, we can have that on or off, especially at this height. If we scroll down, you can set the exposure or not. In this case, for example, I'm not. A lot of times I will go ahead and do that just so I can have a little bit more control over the exposure value and really understand and the focus and really dial it and understand what am I getting out of these images, out of this set of imagery. In this case, we do have a compass there. I saw it flash there at the bottom. So we're gonna check that real quick. So we'll go to the DJI app. Open that up. In this case, it looks like it's okay. Oh, there it is. There is our calibration problem. So we're going to recalibrate the compass on the drone. All right, so we'll hit the calibrate button, start, and we're going to calibrate. In the case, so the calibration failed, so we will recalibrate. Calibration was successful. Drilling back down. This stage of the game, we are fully calibrated. Go back to the stitching app. A lot of times you don't have to recalibrate the compass every single time. It really varies. You just recalibrate it when you need to. Our plan's still here. I do want that at 70%, not 80. If it was corn, I would probably do 80. This is soybeans, so 70% we can get by with. Everything looks good. I'm happy with it. So I hit the start pre-flight checklist. I'll go through the pre-flight checklist. In this case, there is a third-party camera attached to that. It's a Centera double 4K. So some of the things might not be available. That's okay. They continue anyway. That's just one of the things that they have for using a third-party camera with their particular software. So at this point in time, all of the planning is done. It's gone through the pre-flight checklist, everything checked out, and we're ready to start the flight. So we'll go ahead and start this flight. The drone's initialized. You can see down here in the lower left-hand corner, the drone is now flying. It just flipped the camera down, and it is heading up to do its job. So our altitude, our altimeter right now is 109 feet above the takeoff point, and we're 1 foot away, roughly, from the distance. If you look at the rest of the plan, the drone itself is the blue circle with the white arrow in it, and once it hits altitude, roughly now, it'll be a little higher than its maximum flight. It'll fly over and it'll start flying the job. What you're looking at too here is the satellite image is showing 14. So you got 14 satellites. We have good connection, strong connection for the video feed in from the radio controller to the drone itself. And it's flying the job. One of the neat things about this software and a lot of the other softwares now as well is it'll label in what's called a live map. It'll actually kind of stitch on the go. So you can kind of get a feel for what's going on in the field while it's flying. In this case, you can see where it's darker and lighter. That big dark blob is a cloud. It is a fairly cloudy day here today. I think today's August 20th, 2020. So it's pretty cloudy, a lot of cumulus clouds in the sky. So this is not when you would want to fly a field for imagery. This is really just for this example. So you can kind of get a feel for what we're seeing. Here's your bird's eye view. Going on, so we've got in our SD card, we have 29.7 gigabytes free, so we've got lots of room. We've got 83% battery, roughly a 21 minute flight time. Here where it says it shows 26, 27, in a minute that'll be 28. That's our camera, that's our pictures. Beside that would be video, and if we were taking video, and beside that would be a panoramic if we were taking panoramic pictures. And then it kind of gives you a rough idea on what the name of the plane and how much time it should take and how much time is elapsed. So it's going to continue flying. It gets down to the end, it'll turn around and it'll automatically come back. At this stage of the game, I am not touching the controls. I'm literally just standing here watching the drone fly as it goes down the field and turns around and comes back home, and letting it do its thing, and keeping an eye on the field and kind of just getting a general feel for what do I see in this field. What are some spots that I might want to go back later and fly down lower or get some stills or some video of and really understanding what's going on in this field. With that, I think I'm going to stop recording the flight. It gives you a general idea on what we're seeing, what you're seeing on the flight. I'll let it go ahead and finish stitching this together or flying this field, and then we'll be back with a manual flight as well, so you can kind of get a feel for going out and just looking in the field and seeing what's going on. All right, next up, we have already flown the field. We've got a stitched image. We've seen the live map. Got a feel for what we're seeing out there in the field. So I know, maybe some of the key points of where I really want to make sure I hit. So now I'm going to take it up and just manually fly. If I take some videos, or at least a video and some images, some photographs as well. So to do that, at this stage, I'm going to open the DJI Go 4 app. Again, I have a DJI Phantom 4 Pro, so we use this app. This is their home app. If you had a different type of drone, you would use whatever app they would use. So I'm using the same battery right now. So my battery is going to be a little bit lower, but it should be okay. So what we're seeing here across the board, our GPS, we've got 12 satellites. We've got our collision sensors are disabled, which is what that red thing means. But we have a strong signal between the remote control and the drone, and also strong video signal, and we're at 52% battery. We also, right below that, you can see where it says auto ISO, shutter, F, EV, and WB. So those are our camera settings. So our ISO is 100, our shutter is 1/400, our f-stops, our aperture, the opening of the lens is 5.6, and our exposure value is 0.0. So it's locked in. Then our white balance control for cloud or sun is an automatic. Then we are shooting in JPEGs. We're collecting JPEG photographs, and our capacity for that is 3,800 images that we can capture. Right now it is set in autofocus. That's at AFC. If I hit this, I can switch to manual focus, where I can change my focal point. So I can either, if you look at the barn, especially there in the background, here it gets a little bit more blurry. I flip it back, it's a lot more sharp, a lot more crisp. And autofocus is going to go ahead and just try to do that on its own, to the best of its ability. The other main thing that I usually use would be this here's our camera settings. So look inside the camera, so I can change between auto, aperture, priority, S priority, and manual. And I can tweak whatever I want inside of there to change things. So I can change the aperture if I choose to, the shutter speed if I want, and then I can tweak all those. And I can tweak those on the go. A lot of times when I'm flying manually, I will just leave it in auto and let the camera adjust so that I can focus on flying, which is really what I'm there to do. The other thing that I'll do sometimes is I can switch between, push that button, I can switch between video and camera. There's also analog buttons on the controller where I can do that as well. Put that back in that. Put the controller. Put the iPad on the, where I can see, and we're going to take off.
Take off. The home point has been updated. Please check it on the map.
So we're going up over the trees right now. We're 100 feet up and climbing, and you can kind of get a general idea. There's the field. And right there, we just took a picture of kind of an overview of the field. We still have this little corner here. So what I'm going to do real quick, I'm going to fly over. So we're 192 feet in the air, almost 200 feet in the air. I'll come off the side a little bit, try to get off that road. What I want to do is I'm going to go over. I want to get a general, pretty good picture of this whole field. So I got the bottom of the field right there. You can see the back of the field with a quick picture. You guys can see all those clouds across there too. That's what I was talking about with the imagery earlier. This is not the ideal condition to fly for imagery, but such is life. Got some field or some weeds right here. In this case, this is along an old fence row where these weeds are really popping up. Get a picture of that, kind of get an idea. Like those back there might be controlled a little bit better. Take a gander. Got some grass waterways. They've been mowed. They look good. There's some weeds that are kind of there along the edge. You can see the sprayer tracks. So this has been sprayed fairly recently. Probably. Or just didn't fill in real well when it was. Get back here behind the woods and see what's back there. It's pretty good. And some more weeds right there. Picture that. Now again, we're at 200 feet. You can't tell what that weed is, but we know where they are. We've got a record of them. And from up here, what I like to do is just kind of get a feel for what am I seeing in this field. What are the worst spots? We'll get down a little bit lower here later and really kind of look at these weeds a little bit more. Right now, I'm just trying to get kind of a general idea. You know, how widespread are these issues in the field? What are we seeing throughout this field? Oh, no, it's not bad. And seeing what I'm seeing here, I'm guessing it's probably maybe volunteer corn, but most likely we've got a fair amount of giant ragweed. We're going to flatten a little bit lower, this little guy here. Sorry about that. I imagine that was a bit of a trip. Yeah, that's giant ragweed. Get in a little closer. So it has been sprayed. Looks like the leaves don't look like they feel very good, but that's definitely pollinating. I imagine I'll go ahead and go to seed. Yep, there she is. Get a close-up picture of that. Follow this path. It looks like some of that ragweed might be dead. I want to get down and take a look at it as well on here. See, you know, how well is it controlled, or is it not? I'd be curious what they did differently. And that's a conversation to have with the producer. Yeah, those are smoked. Looks like. It's interesting how those are smoked and the one right next to it's still green. So a few ragweed here and there, looks like. I mean, that's what those clumps really are. Overall, not a bad looking stand of beans. Not seeing a lot of really discoloration in the air. There's something right there, that light patch. That's in the crosshairs. So fly that down, take a look at that. Hard to tell in some cases with different colors because of the clouds. There's another ragweed patch right there. We're going to go ahead real quick and go up to 400 feet so you can get an appreciation for what 400 feet looks like. So 3. Okay, we are at 400 feet right here. So that's 400 feet. There's the horizon. In the field. We got a fruit trial in there, maybe. Different hybrids. That field. And that angle of the field. Again, here's the horizon. I mean, so you can see a good long ways. Now, they're limited value really because, yeah, it's a pretty picture, but I can't tell any of these fields hardly. You can see there's something maybe in this field here, but you really have limited utility. You know.
Battery level is low. The aircraft will go to the home point in 10 seconds.
So battery's running out. We better bring her home and land it. The other thing I like to do sometimes is take a video. Let's go ahead and grab a video now while we bring it back. So this is taking a video. You can see there in the right side, it's 8 seconds now. While we're taking a video, we can also take pictures. Good. Then we'll go ahead and start thinking about landing her. Put her down in the driveway here. Make sure when you're landing, you got a safe zone to land in. I do like to land on something hard. If you want to use a pad, that's fine. But somewhere you can have somewhere safe to put it down. Put it down, pull the thing down to the propeller stop, and you're good to go. And that kind of gives you a general idea on things that you're looking for, things to see, things to look at in the field. You can see kind of the quality of the imagery that you can really get from these things. And this is just a production soybean field. Right now, actually, I'm down around Thorntown, Indiana. So there's nothing special about this field. It's just a production field like any other that I would fly. We'll close this out, and that's basically how I fly a field when I'm scouting with UAV, whether it's a production field or something where we have a study, things like that. Those are the practices I use, and that's what I recommend to people if you are interested in flying them and really getting the full value out of the UAV to think about doing it this way. At the very least, make sure that you can get up there and just get some good images and some good video if you don't want to use the stitching software. But that stitching software really just brings it full circle to where you can really dial in and understand exactly what's going on in the field. Now, that's not to say that none of this replaces, the boots on the ground, getting out in the field. So a lot of times what I would probably go out and do is go ahead when I'm done here and take a walk to some of these spots that I noticed where we have that ragweed and kind of get a general idea of how's the ragweed look. Has it been sprayed? And maybe we have that rapid necrosis response where it takes a glyphosate and kills and then comes back. What changed between the ones that didn't die and the ones that look like they did die? And I go out there and just take a sample and maybe do a quick evaluation, kind of understand how did that happen. So you still need to get out there and see the crop and see the conditions, but it really helps to understand where do I need to go. And then the beautiful thing too is you can also, if you fly them multiple times in growing season, you can go back in time, in effect, and really see and understand what's happening in this field as the growing season progresses. This presentation is using a UAV to scout a field.
All righty. There it is. Is there any questions?
I'm not seeing any questions in the chat box here. So if there aren't any, we're going to go ahead and proceed forward and get to the closing of the meeting here. So thank you, John, for recording those videos and showing us the demonstrations on flying UAVs and different technology within digital ag. So now what I would like to do is kind of show you guys what we're always required to have a regulatory topic, right? So I'm going to do you all a favor. I see some people about ready to take a nap, but I see that we've got a few things here that we need to discuss, and then we'll get into the logistics of the PARP credits. Okay, so just some preliminary things, and a lot of Adam really touched on this during his presentation. Any private applicator records, they need to be kept for 2 years, and they need to be recorded within 30 days of that application. So make sure you have that. There really isn't a specific form or way that you need to record them. As long as you have those, it's really important to have that. So different informations to have on restricted use pesticides. You have the location, applicator name, and permit number, date of application, crop, pest, acres treated, rate, total amount used, brand name, and formulation. Make sure you have the manufacturer information and the EPA registration number. So these are all required. These are mandated by the state chemist office. Also, fertilizer application records. So if you're a Cat 14, make sure that you have your private applicators, you keep record of manure applications. Commercial applicators, you need to keep record of inorganic fertilizer and manure applications. And you need to make sure that you keep those application notes for 2 years. And so also commercial companies. So if you work for a co-op and you go out and apply for a producer, you can also utilize or keep the customer's records for them. So if you need to do that, you can do that. So this is just an example of an Excel file of what could, or a file that, or a table that you could make for some of those records, so you can just kind of have those on your screen. As far as a legal access, the only people that really have record or should have access to the records of your applications would be the state chemist office or a licensed healthcare professional. And well, you might ask, well, why would a healthcare professional need to see that? Well, if you have a worker on your farm that gets accidentally exposed, or if you have an application and it drifts onto somebody and they start having significant health impacts from that, you need to make sure that you go back and provide that to the healthcare provider in that standpoint. Also, CFOs for manure sales required records. Make sure that you have the distributor and seller records. Require the name, certification number, amount sold, the analysis date, and the date. Also, those records are supposed to be kept for 2 years. Also similar to the private applicator record keeping requirements for restricted use pesticides. So really not a lot on that. Some additional items to include would be any weather conditions, scouting observations, and any problem areas that you find within your fields. You can utilize those, and when you go back into the field the next year, to make sure that you know where you're scouting, if there's a insect outbreak or if there's a weed escape or something like that, you can go back and know exactly where those were.